Hello, everyone. Welcome back to the rationalinvestor.com's. What is this? This is the Broiler Chicken Show. Bark, 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 bark. Bark, bark. Yeah, Nuri's all by himself here in the Zoom call here today, but there are a few people over on YouTube. So hope you all enjoy the show over there on YouTube. You are US Tubus. I don't know. Do we do the monetization thing on these weekend shows? I'm not quite sure how that works. I know I hit the button on. Oh, there's Chris. Chris is here with me, so that's kind of cool. Hey, Chris, how you doing today?
Doing good. Happy
All right.
Sunday.
Happy Sunday. Shout out to Chris's buddy. She was wondering who the hell is Winnie the Pooh. Who's this Woody guy that he always keeps referring to? If you're listening to the background, hello to you. I don't know who your name is. No, but anyway. Winnie the Pooh is the dear leader of the actually be interesting to see. I keep hearing more and more YouTube videos about how China's getting ready to rock and roll over Taiwan. Yeah, we'll see what happens there. Thought it was interesting. The news: China's Ant Group says founder Jack Ma will give up control. So nice to see Ant Group is speaking on behalf of Mr. Ma. Who knows where the hell he is? But what a great anecdote. And I even put out a tweet even this morning. I was saying, oh, wow, looks like poor old Jack just got chointed. So I don't know where. Maybe oh, there it is. There looks like Jack just got chointed. Actually, and I'm hearing a lot of people are getting sort of rah bullish about Mr. Trump again. So it is interesting to see how the right wing, or I guess the left wing, is trying desperately anything they can possibly do to try and prevent Mr. Trump from coming back in 2024. It almost feels like it's destiny and it's like Napoleon or something, because Napoleon came back and finally he had to be defeated a second time on the battlefield. Interesting to see whether we actually go to war or not here in North America. I suppose you could argue that technically there is a kind of a pseudo war going on in Mexico right now. And my dear leader, substitute drama teacher, is like, well, you're on your own. If you're Canadian in Mexico, good luck. Oh, God, it's incredible to watch substitute drama teachers. And speaking of which, I watched an interesting video that we shared on the site today. A British guy, I'm not quite sure who he was, but sort of laying out how there's some absolutely insane censorship laws that are being sort of promoted and passed in these various Western countries. So it's gonna get a little dangerous for good old guys like the Beamish. The good part about it is I don't really shill you anything in particular other than maybe buying our education program and buying our fledgling algorithm tools and things I've been working on for my career. And I guess speaking of which, we should probably talk a little bit about that. I'm back on the long side. I got flushed out on the short side. Well, not flushed out. I got flushed out of my long. The system, I guess, had a bit of a hiccup. I'm not quite sure. Then it flashed a buy signal. So I went and just bought the position right back. Like I took like a $15 haircut. Oh, well, not the end of the world. Anyway, I suppose we can talk about that today too. So lots going on in the world. And unfortunately, it's going to be a little bit of a tough slog for us Joe six packs. If anything, we probably went through a long period where a lot of the higher ups in our society kind of probably got pissed off at the kids doing as well as they were in crypto and stuff like that. And unfortunately, about once every 10 years, you got to go through one of these sort of flush outs where they just literally clean everything out. And half of your job, unfortunately, here is just to put yourself in a position where you don't get sent off to jail. So try not to do illegal things. Um, pay your taxes. You got no choice in this world. Um, Try not to piss off too many people. I have noticed that actually I haven't gotten too much negative feedback lately. So I think on balance, probably the rhetoric that I do is sort of it's just outside of actually getting people to the point where they want to sue and stuff. But we're definitely in that kind of environment. I wouldn't even be surprised, to be honest with you. I would not be surprised if there are lawsuits and stuff about Tesla and stuff, because I would imagine anybody who bought Tesla stock over the past couple of years is probably pretty upset right now. And then of course you have all the cryptocurrency stuff going on right now. So this is the absolute worst part of the capitalist cycle. But ironically enough, if you actually can identify roughly what part of the cycle we're in, then you can sort of navigate. I haven't necessarily been that active in the market lately because I just don't think there's a heck of a lot to buy. And interestingly enough, assets that I am interested in buying are actually assets that historically I don't really want to be bullish. You don't want to be bullish of gold, right? Because that implies more inflation down the pike. And I thought this is an interesting report. I think a lot of people in our society they're going to get euchred into thinking that the worst of it is behind us. But I have a funny feeling, all of our kids on the site who absolutely love the celestial work and stuff like that, they're all barking about 2027 supposed to be some, horrific celestial window. And I thought it was interesting. I did hear, a bit of chatter, and I wanted to look for myself, and I couldn't believe it. Like, I honestly believe that we have like an 80-year money cycle. And so you can really, and really, I might even argue like the whole economy is because the banksters run everything, eh? But the whole economy sort of moves on these money cycles. There's popular names. I think that some guy calls it the fourth turning or something like that. Klaus over there and all his commies over there in Europe, they want to call it some sort of fourth industrial revolution or something, where you will own nothing and be a good communist slave and be happy. Whatever the hell that means. So anyway, what I thought was interesting was, if we use that 80-year reference, and actually Joshua is working on a document. When he publishes it, it's gonna blow you all away. I love the fact that we have all these little hidden gems that could just pop up out of nowhere. He's working on a specific document that it's just going to be so beautiful when he publishes it, but we're not allowed to talk about it until it comes out. But the point here is, I believe that everything's on cycles, and there is a money cycle. I think that's pretty obvious. We've seen over the generations. And if you look back, 1920s, 1930s, was huge sort of socio-economic upheavals. Coming out of that, sort of setting the stage for the next sort of, literally 80-year cycle, Bretton Woods and all that kind of fun stuff. But really, because the banksters have to basically continue their money lending practices, and you can only issue so much debt, and then the whole thing just starts falling apart. The easiest way, once every money cycle, is you just simply hyperinflate prices, hyperinflate the quote unquote size of the economy, and the old debt relative to this brand new economy, relatively speaking, is a lot less. And so as a result, you can go and issue a whole bunch more debt. And of course, that's how the banks basically make their living, is issuing debt and just keeping us all in slavery, servicing that debt. So the point is, unfortunately, whether you call it the Great Reset or Klaus is going to come all over your face or whatever the hell you want to call it. There's a nice image for you. I hope everybody got that soundbite. Suppose that probably kills the whole monetization of Google videos, eh? Way to go, Brian. In one fell swoop. Boom. The long and short of it here is they're going to hyperinflate our economy so that we move on to the next cycle. And if you look back, 1940s was the previous one. Then you go 80 years prior to that, and in North America and actually quite right across Europe, there was a whole bunch of civil wars and stuff. Quite remarkable. A whole bunch of new nations just sprung up out of nowhere, and of course, new nations means a whole bunch of new debt instruments, right? And then banks win again. So the point here is 1860, huge upheavals in the world. Then you go 80 years prior to that, 1780s, any American audience, 1780s should speak loudly to you. 1710s, interestingly enough, and 1700 even, that was the whole King of Sweden. We never even hear about Sweden anymore. In fact, following the military defeat of the King of Sweden, Sweden basically was quote unquote neutral. Now, neutrals, how do you define neutral? But literally, they don't want to have alliances with anybody since then. But I guess just the point being that that's just going back, the past 300 years. And there was, this will be 1, 2, 3, 4 cycles. And of course, prior to that, and that's an interesting one, 1620s, because if I'm not mistaken, 1620 around then was when the city of London, what was the city of London, the Great Fire? Somebody find out that for me, if you could. But anyway, so it just goes back. And of course, that was the destruction of the tally stick system and all that kind of stuff. Again, serving the banksters' needs. So if we just go back to the 1940s, and I don't know whether you can see this or not, it might be kind of hard to see, but this is inflation 1940 to 49. This is a consumer price index. And what's scary about this is that our inflation today is vastly underreported because all the statistics that they give about things like consumer price indexes, they're highly, highly manipulated. So the inflation rate today that you see is it's a fraction of reality, but we won't get into that. Point here is, look at these numbers, 1947. So if you think, right now, relatively speaking, this is 1942. Oh, geez, whiz, you can't see that image at all. It sucks. So blurry. This is where Josh goes, I can't see the damn screen. Anyway. There's 1940, right? You can see 11%, 12%, 12%, 12, 13%, 10%. So this was the comparison of, 2022 for us. The reported numbers were 5, 6, 7, 8%, but in reality, let's call a spade a spade. Everybody knows this. Their government numbers are just a fraction of reality. So, and then you can see numbers started to calm down. Of course, we've got the Fed raising interest rates. You can see by 1944, you can see there's actually like a zero print, and there's a 0.5, and there's 1.7. So they did get that inflation rate back down, but then notice 45, 46, 47. Look at these numbers. They are absolutely through the roof. 12, almost 15, 17, 19, 18, 18, 19, 19. Oh my goodness. Oh, I like that. Inflation is higher than the pixel count on that image. And, my apologies if it's very hard to see this, I suppose. I mean, anybody can get this information, right? Said annual inflation rates, 1940s. And it looks like, which was the one I used? Maybe this one here, consumer price index 40 to 49. And there you go. At least now you can see the numbers. So a little bit better. Point here is, oh my goodness, these numbers are ridiculous. This is the actual index, I guess. Here is the actual inflation rate. So 47, look at that, 18, 18, 19. Oh, Jesus Christ. So it looks to me like the very end of 2016 and the very beginning of 2017. No, 16. Try again, Brian. Lost a decade there. 2026 and 2027, they are going to be even worse than what we just went through. Criminy. There's 1942, and we were just barking recently about how ugly inflation numbers were, but you can see these numbers are much, much higher. So, and this makes sense, right? Because this was right around when they actually did the Bretton Woods thing and they pulled off the World War II. And the problem here is World War II, and I can kind of see the same things happening here, because the narrative I'm hearing in the sort of the media is, we are running out of shells to send to Ukraine. What? So all of these Western nations that basically just opened up their purse strings to the Ukrainians fighting the Russians. They're now starting to say that all of the sort of extra stockpiles that they had of military munitions have been drawn down. And there's actually a need for us to actually start making more weapons of destruction. We won't call them mass destruction. We'll just call them weapons of medium destruction. Because, if the irony of it all, if it's one thing the United States has done very well, is they have perfected the art of murdering people. It's almost evil how they can murder people. But anyway, I suppose that's another conversation for another day. So what usually happens in those war environments is, the industrial machine is going to be encouraged to start ramping up production of shells and grenades and bullets and guns and, whatever's. And then if there's some sort of abrupt end to that, then all of a sudden you get this weird vacuum where there's just nothing done. And there's no government funding. And you might actually find that, on the other side of that, like what I think is going to happen here is that the Fed's probably going to raise rates to the point where the market breaks. We put in a bottom based on our Benner year cycle. I mean, in this particular case, you can see 1944 was actually when rates got the absolute lowest. And I think, you'll probably see that something breaks. The money cycle turns. We've talked to you guys lots about the money cycle. Suppose I can show you a chart of that one. Where is the money cycle? Probably one of these charts over here. Fixed income. I think I have it here. Fed spread. So we know that this doesn't really come to an end. All right. Waiting. Not quite sure what's going on there. I just clicked OK because I just wanted to get the thing on that chart. There's on the screen. Anyway, so there we go. Money cycle. We should pivot next August 23. So my hunch is that, that will put us sort of over here. I think, there's probably, you can see falling rate, falling. At some point, they're going to be like, okay, we've actually now got inflation below real rates. And I think that's what has to happen, right? And I think Stanley Druckenmiller, he made reference to that recently, that if you go back and look in time, this interest rate has to keep going up and it won't stop going up until it is actually above CPI. So you get a situation where, and this happens to be this particular data set. I don't know whether we can use the same data. I'm just sort of talking about the type of year we're in, like our awesome blogger on the site. Let's see, where can I find the blog? Over here. Pointed out, Mr. Benner has suggested to us that we should look at some sort of pivot bottom in the market here. My hunch is this comes in sort of through 2023. It's not going to be like there's like one specific date. That's the bottom. If anything, I'm feeling like, you know what 23 is going to look like? And somebody remember this, mark my words, this would be a really good Google short. Mr. Richard Wyckoff lived, geez, I guess 100 years ago now. I never know how to spell his name. Actually, about distribution. Mr. Wyckoff, who lived 100 years ago, suggested that market bottoms often look something along those lines. And I, frankly speaking, I've been playing this game so long, and I have to agree with him. A lot of trades that I really like to take are when the W's come in right against these previous lows. I love those. I would prefer that this W come in on these lows holding, but quite often this does happen in the market. And then just as everybody's going, oh my God, it's a new AM, oh, we're going short, oh, it's the end of the world. Damn market quickly puts in a bottom and then just goes flying the other direction. So if you can think of 2023 as looking like this, then I think you'll do all right. And, there's incredible how many similarities. So if we think about that interest rate cycle, then what we're thinking is, August, which is probably somewhere right in this area. That's when the Fed starts saying, okay, well, the year over year data is looking okay. We've actually got short-term interest rates because now they're like 4 or 5%, right? So maybe we get that short-term interest rate, the CPI number, to start printing below 4 or 5% all the way over here. So that's 6-8 months from now. And they go, okay, now we can start lightening off and maybe even lowering rates, and then away we go. And I've told you guys recently that I like the idea of where is it? Probably crypto tastes great, but it might be cycles. I'm not quite sure. So many darn cycles. Macro crypto cycle studies. I think this is it. Yeah. Which one do I want to choose here? Let's go with this one. Survey says. Let's see what we got. No, that's not the one I wanted. Took a shot. What the hell? I think it's up here somewhere. Sorry, everyone. Oh yeah, here we are. Actually, some of these. This is what more I'm thinking. Yeah. So if we throw on our this is sort of what shall the next greed cycle look like. Here's stock market bumping along, doing its thing. You can sort of see that based on previous, the dark blue, that's the greatest generation, sort of think George Bush Sr., people who fought Second World War. This yellow line, that's the baby boomers. They grew up in a time period where there wasn't really credit issues. In fact, Reagan basically said, hey, let's all deficit spend until we're drunk, right? Voodoo economics. The economy went absolutely crazy. Anyway, We're probably going to do something similar to that, but you can see how in this particular part of the cycle, well, there was actually a bit of a trough, and we're getting that trough in the market as well. But here is the crypto, the Bitcoin cycles. So it's interesting how, we have a big halving event coming up here next year, and notice how in the stock market, actually both markets did fairly well. Baby boomers, not so much, but basically this is that coming sort of 24, 25, 26, sort of there's 2028 way over there. We're figuring that something's going to happen here somewhere around 20, 26, 27. I might even suggest that actually this is a little bit far out. Far out, man. I think probably we could actually even squeeze this in a little bit. But actually, no. You know what? I'm going to take that back. This was the peak, and this was the subsequent sell-off. So, yeah, I mean, I like the idea that the very end of 2025 or so, October, November, that's actually when I like a next crypto top to come in. So it is interesting that there's the 87 crash happens there, and you can see the greatest generation. They had sort of a soft pullback here. But this is that 27 period. Unfortunately, when we go back and we look at our Benner image, and actually I'm jumping all over the place here, but just to finish off that Benner thought. Where is Mr. Benner? Whoops. Oh, that's funny. Maybe it was. There we are. Notice we're supposed to peak in 26. This is like a minor bull. So I like the idea that you could compare this 23, 24 trough, 25, 26 peak as sort of like actually probably a lot like the original Bitcoin rally way back when. I don't think alts are going to do that well. Like there's so much writing on the walls that Big Brother's coming after sort of crypto and that runaway sort of DeFi kind of marketplace that I wouldn't be surprised if Bitcoin still does it fine. But you might even find that this cycle, Bitcoin, it only rallies up to maybe test the old highs. I don't even know whether it needs to even go to new highs. Because, I mean, 16,000 to 60,000, that'll still be a pretty hefty rally. But anyway, that's not the point of this. This here, looking for this 23 pivot. And like I showed you, that money cycle, it seems to be suggesting a 24 pivot's not a bad idea, or 20, middle of 23, somewhere in that area, we get some sort of pivot. Then we had another report that came out yesterday, which was so cool. I guess not yesterday, but Friday. The January barometer, it started to spit out usable information. That's this image. And then, before I get into that, just try and remember, and then what I wanted to show you, but I didn't load the right chart, is sort of Bitcoin's cycles. When to buy and when to sell. Wouldn't everybody like to know that? Remember, this is not financial advice, right? The views expressed by the commentator are his and his alone, and management does not accept responsibility for his idiotness. This is supposed to be edutainment, right? Follow your plan. You don't know what a plan is, get in the school and learn how to build a plan. And learn how you can come in and show me how to do this. That actually, I'd be really impressed if you could do that. That would make me happy. Because actually, full disclosure, everybody should know, especially we're going to have all right, let's see if this connects now. Hey, there it goes. Anyway, we're going to have a contest. We are having a contest, a raffle here for our upcoming level 1 seat. And I love it. I mean, my goal in life. And actually, I went and visited JoJo's grave on last Thursday. So was talking to her a little bit and thanking her for her guidance. And actually, it was interesting. Liam was like, "Yeah, it's okay to go," but he wanted to stay in the car. He didn't want to go into the grave. So anyway, he was okay with that. Anyway, point here is my number one goal and desire in life would be to have you become better traders than I am. For you to come to me and say, Brian, you're doing that wrong. You got to get to that point, right? What are you doing there? Are you following your plan, or what's your setup, right? I mean, God, if I can get you to that point, I've done my job. So, okay. So cycle wise, I've talked to you guys before about how I think that this 2012 through 16 cycle actually better describes the way this market has acted than anything else. I think that the 12 through 16 cycle is much more reflective of the environment and all that. Because keep in mind, I mean, I remember through here, the altcoins were garbage. We used to call, XRP or Ripple. We used to jokingly call it cripple, right? And, through here, we had to deal with Crapsy. I don't know whether any of you guys remember Crapsy or not, but, and this was dealing with Mount Gox and Roly Poly Oly and China Man and all that. Oh, and then more things change, the more they stay exactly the same. Anyway, so point here is look at this base. Look at the way price behaved through this entire consolidation year, because that looks a heck of a lot like what the S&P 500 just did. And they always say that the January barometer, the traders in the market, they actually kind of know what's going to happen for the coming year. And in a weird sort of way, the way the market behaves through the month of January, the first hour, the first week, the first hour, the first day, the first week, the first month. Ultimately, down the road, you'll find that the year actually ends up looking like that. It's shocking. But anyway, so does this image look slightly familiar? Remember what I just said about Mr. Wyckoff? I mean, just grill that image into your brain. Huge dump down, then rally back, then come right back down against the lows. Then is this a nice little FU move against these lows? And then straight up into the end of the year. All right, let's go look at what did Mr. Wyckoff say we should expect. Face rip down, rally back up, then down into the lows, and then face rip straight up into the end of the year. Gee whiz, that looks awfully familiar, right? Maybe not the end of the year, but anyway, that's the Wyckoff distribution model, I suppose, accumulation in this regard. And then, like I said, add insult to injury. If we think about, all of this, of course, moves on don't fight the Fed. So if the Fed's going to be like, screw you, we're raising interest rates, we don't care. But then, CPI data comes down and, Mr. Druckenmiller, as soon as the CPI data number is lower than the Fed number, then you know that they're done. We get that print, and then they start saying, okay, well, now we've done our job, so we can start lightening up. And then the risk market comes zooming back. And I thought it was interesting. I listened to a video by Larry Williams. He has sort of his annual forecast that he'd like for you to buy. It's probably worth the while. I mean, it's a couple $100 if you got 100 G's in the market. Then it's probably worth just getting his 2 cents. But I get the impression watching his free video that actually he's thinking that the market is going to have a substantial rally through 2023. And frankly speaking, I think it's going to look almost something exactly like this. We're coming out the backside of the year. If you had loaded up and you had done all your due diligence and got your names all ready to rock and roll, this time next year, you're going to look back and say, well, it's too late. You should have bought when we were bottoming right in the middle of the shit there last summer. So that's kind of what I think is going to happen here, folks. I mean, there's a lot of anecdotal data supporting that. So I was, and Williams even said, I was uber bullish back in like 80, I don't know. Well, anyway, go watch his video. And he was saying that, hey, I'm even more uber convinced this go round than I've ever been before. So, when a guy starts talking like that, probably worth paying attention to. And then, to put it all together, like I said, that image, and of course, beloved Bitcoin, and those previous year comparisons, and of course, our first 2 weeks study, this is going to start, showing that, hey, things are actually ticking up here. But that Bitcoin chart, where the heck was it? That's not that one. This one. There's that same image again. Big dump at the beginning of the year, then sideways for a huge chunk of the year, then sell off and get everybody thinking uber bearish, right? So that's this event right in here. And what was interesting is, I remember, if I'm not mistaken, it was interesting listening. Somebody posted a video by Simon Dixon, and it's remarkable how he's still working away in the space. Most of the guys that were sort of influencers back here, they're long gone now. I don't hear from any of them. Other than the guys who are actually declaring bankruptcy. Well, then all of a sudden you start hearing about Barry Silbert again. Anyway, so the point here is, this was an interesting move. Like on Phoenix, this was actually a really big dump. But there's that Wyckoff image down, right? Big face rip down to begin the year, then sideways, a lot of chop back and forth, and then come out the back end of the year with some big ass fucking rally. And then, like I said, beginning of next year, you're going to look back and go, well, is it too late to buy? And it's, if Bitcoin does its crazy ass face rip move. And also too, what's scary, right, is if we're thinking that the 1947 scenario plays out, wherever the heck that was, right, that's this nonsense. Can't see it. There's the number there. So you can't see it. That's for Josh. Look at these numbers, right? Does it not make sense? Bitcoin has a huge rally into the beginning of 2026. Right. And then Bitcoin starts topping out. Keep in mind, the first quarter of 2022, you guys all still thought that Bitcoin was still going over 100 G's. So could we, like the first quarter of 2026, still be like rip roaring high? And then you notice, like, look here, I don't know what the hell happened, but in June, July of 1946, look how inflation was like 2%, 1%. Oh yeah, okay, everything's fine. And then 3%, and then 9%. What the hell happened here? Inflation rate like triples. Oh man, So, and then we're just like in nightmare scenario here for like the next year or so. And another typical crypto Bitcoin topic cycle. And also too, if we go back to Mr. Benner, wherever the hell he is, like he's over here, right? You can see that once we get through 2026, the market actually 2027, right? Horrible inflation numbers all the way to 2032. This is just going to be the shittiest 5 years ever. Ugh. And actually, it's interesting because, like I said, we've got one gentleman on the site who's like super celestial guy, and he's been barking that, basically, you think that the celestial crap is bad now, man. You ain't seen nothing. When 2027 rolls around, just go, they've got these caves in Turkey where they say like 100,000 humans used to live in these caves. They're like full cities. And the caves, you actually, the levers to lock the doors were from the inside. Now, why the hell would you put a lock on the inside? Unless maybe you were trying to keep something that was outside out. You didn't want it to get inside the cave. Oh, goodness. So, oh, goodness. So our job all of you, right? The big sales pitch is you better work your bloody asses off over the next, you've got this year, right? And this speaks back to, do you have your together? Where is that? That's this image. We are now in that window where, I still think that, first, second quarter of this year, there could be some nasty surprise to the marketplace. My hunch is there's going to be a bunch of negative sentiment all around Mr. Bankman Fried guy, going to trial. He's still calling himself innocent. He pleaded innocent, so it sounds like he's going to fight this thing tooth and nail. And I can hear it now. He's going to go, I hear you, but let's see how he squirms his way out of this one. Well, anyway, point here is I think we got a year to get your together. And I thought it was interesting because, Bitcoin, of course, I think originally was created as an inflation proxy, something to offset. Because I think, first off, I think Bitcoin and Mr. Bush Sr. and all the cronies out of Skull and Bones, if you know what that is, talk about Potion for Disaster, bringing that topic up. Keep in mind that I'm actually a fraternity brother of all those guys. I went through all that shit, DKK, yippee-ki-ki. So, and I hell, they could probably burn me at the stake just for saying that on a YouTube video. Anyway, so the point is that I think it served purpose perfectly. The CIA guys, of course, they ran Exxon, they ran Halliburton, they ran the Carlyle Group. I mean, yeah, they're basically in bed with the Saudis and the whole damn thing. I mean, just insane how corrupt the whole damn thing is. But anyway, so my hunch is, we saw the 40s and the inflation down to there, and the sort of the post Bretton Woods injected inflation. My hunch is we're going to have to go through that again. And of course, Bitcoin, half of the reason why it was built was to offset these effects. Is this the magic Bitcoin zips up to 100 G's? I don't know, maybe 200 G's, 300 G's, 400 G's. Well, only time will tell, right? So, but you saw that inflation data. So it's interesting because me personally, it's not really like I have a love affair for any one particular asset or another. What I like are weekly W's. You show me a weekly W, I'm going to start saying, whoa, what is that? What business are they in? How many shares are out? I mean, that's the very first question I always ask anybody who ever asks me about any stock anywhere. I always ask, very first thing, how many shares out? And that's really the first question that you should always ask, because the 90% of the people that get themselves into trouble with investing, they just come and they buy assets after the fact, where you're not getting in on the ground floor. You're already getting into an asset that's already been well bid up. And actually, one of the ways that companies do increase their market value, their market share, their market cap, I guess they call it, is they just keep issuing more and more and more shares. And, if you just watch the price of an asset in the marketplace, you never see that stuff, right? You wouldn't know that all of a sudden this company doubled the amount of shares outstanding. And actually, interestingly enough, I heard, I think there was one big tech company that recently did that, and somebody was tweeting it out. Thank you, whoever that was who posted in the lounge. That was a cool comment. It was either Apple or it was Tesla or something like that, where they were desperate for money and they just went and basically doubled the amount of shares outstanding. Boom. And did a big private equity financing. So all of a sudden, all the old shareholders, they just had their interest in whatever, interest in the company just cut in half. It was quite remarkable. And that's, that's sort of a sneaky way that companies can go and raise a lot of money, is just keep issuing more shares. And, you might argue that's half the reason why Bitcoin has done as well as it has, is because you're theoretically, you cannot issue more Bitcoins. Now, it's fascinating to watch like all of these guys that are classic Wall Street operators. I think this guy is just a puppet, which is kind of sad. But really, when we talk about the FTX debacle, we're not really talking about this guy. I think this guy is the patsy. If anything, this guy is your who's the guy who took a pop at Kennedy? And sort of like Booth, right? Same thing with Lincoln and his assassination. Lee Harvey Oswald, right? I mean, was Lee Harvey Oswald really that smart? I mean, the irony of it all is they say that actually he was a CIA agent, but nonetheless, I get the feeling that this guy's actually very similar to that. He's kind of like, I think they call him a pigeon or something like that. Anyway, the guys that you should be really angry about are actually where is his wonderful face? It's in here somewhere. And unfortunately, it's guys like that are, guys like me who point this out and bark about it. They're the guys who end up getting assassinated. So we'll see whether I make it through this cycle or not, but that's another conversation. Where is he? Where is he? And I can't even remember his name. And I think he did this on purpose, right? Because he doesn't really want a lot of the people in the public knowing about him. Anyway, somewhere in all this mess. Isn't that funny? Yeah, there he is. Way back when. What the hell's his name? The puppet master, Dan Friedberg. That's the guy that actually you should be angry at. Oh, hey, the porno guys are back. Woohoo! My private photos here. Ooh, you're sexy. Hey, I don't know whether you're aware, Mr. Private Photos, but CRTC now in Canada, oh my goodness. They've got some just absolutely insane legislation now about quote unquote protecting children and stuff like that. You guys peddling porn and stuff like that. Woo-wee. I mean, I'm not so bad because I don't, like I was telling Chris this earlier, in this world, don't commit a crime, pay your fucking taxes, just do what you're told, right? And you should be okay. But you guys who are like shilling porn and all that kind of stuff, oh man, be careful. Your days are numbered. Big Brother's coming after people like you. I'm not going to show your crap on my channel, but just a FYI to you, you probably ought to find a different vocation going forward. Anyway, back to our story. So, these are the guys that you should be really angry at. But ironically enough, this guy will probably never be held to account. And sadly, this guy here, his girlfriend and that other partner of his, they basically threw him under the bus. And I think they're going to become what do they go? They turn state evidence. I can't remember how it's called. Anyway, I don't even think I have a picture of the girl. Caroline, I think her name is, something like that. Anyway, and actually it's interesting because, I was listening to Mr. Dixon this morning talking about the Celsius guys, and is he pissed off about those guys too. So he's just as disgruntled as everybody else in this space over these clowns. It's kind of a shame, but every cycle. I totally warned all of you guys. I distinctly remember saying that, at the very top of the market, when I couldn't stop you people from buying, and trust me, I couldn't stop you to save my life. Up here, the scandals that were going to emerge and that would bring the ruin to this space were actually happening at the top of the market. That the getting you guys sucked in on the buy side was, one of the hallmarks. And of course, they say, well, this time it's different, blah, blah, blah. And of course, it never is. So now we are seeing those scandals come to light. If anything, we kind of hope that that's it for the scandals, but I have a feeling that this is going to be dragged on probably a good chunk of this year, whether it's be regulation this or regulation that, or KYC this or KYC that. It's going to be a slog of a year here, folks. But once that's done, all right, and you've survived, then I actually think that there's a lot of upside here. Somebody was mentioning it. Some of these altcoins, and if you can start learning about what are some of the cool stories and stuff to keep an eye on going forward, I was surprised. I mean, that sushi's got a big fat W working in it now. So I was a little surprised at that. In fact, actually, I put a bunch of names in the lounge that look very interesting to me. I mean, I don't know what happens here. I had sort of said that I was going to risk against these lows. So seeing a W, remember I told you that Wyckoff check model, right? That's basically what this is. And these are my favorite ones where it comes right back down against the original low, holds the low, and then turns back up. I love these. So we'll see how that goes. Only time will tell. It's just sort of surfing through names here over the weekend, and it's quite surprising how many bottoms are coming in here. So yeah, here's that the guy who was shilling the porn links there. This guy here. This guy put an interesting video on the lounge here today. So Mr. 69XXX site, I would strongly suggest you watch this, and you better have your ass covered, because these governments, they're coming after people like you. Absolutely. And people who shill like shitcoin scams and stuff and Ponzi's and all that. They're coming after you. So you better clean it up. If anything, this is half the reason why I do things like I've got 2 rules of investing. If you don't follow the rules, you're asking for trouble. You follow the rules, it's actually difficult to lose money in this game. But nobody ever wants to follow the damn rules. So anyway, here's a really cool anecdote of that inflation. And I didn't get to this before I got off on a tangent about something. So remember we had said that in 47, there was massive runaway inflation problem there, right? And so for fun, the other day, and I'm not even quite sure why I did this, but I was like, how did those gold stocks act coming out of that last cycle? And this really jumped out at me. Newmont Mining is the second biggest gold company, or not second, it's the biggest gold company in the world. Barrick, of course, wants to try and take over that position, but Newmont still is number one. And here's this gold company in the 1970s. And interesting, because, everybody gets all worried about inflation. Remember, they talk about the 1970s as the horrible inflation period. And this is your gold price going up from like, $100, $200 all the way up to $700, $800. And interesting enough, Newmont, it did okay, but it didn't like go up like 100x kind of thing. I mean, it was a pretty big rally. Don't get me wrong. But where did the really big face rip rally happen? And interesting, in Newmont, it actually happened in the 1980s. And fascinating, if you just look at market structure and you draw Foggenbaums, and gee whiz, there's a big fat 4.669 bifurcation level. What a surprise. Boom, right into it and then done. So just for fun, I was kind of like, well, what does the Newmont chart look like now? And when I pulled this up and I did the comparison, it actually kind of made me kind of fall off my seat. So, here's that big run up, 2020, hyperinflation and Chair Powell and give them all the fucking money they want, blah, blah, blah. And so there's Newmont. I mean, again, didn't do a massive rally, but a pretty good rally nonetheless. So we're getting used to sort of our new economy. Interestingly enough, as the Fed's getting really jazzed about raising interest rates. And remember here, this was Paul Volcker's war on inflation. I'm going to raise interest rates through the roof. So that theoretically got in front of inflation, but the problem is that the damage was already done, and this had nothing to do. And this is the hardest part about all of this is, this is more to do with Klaus and his Great Reset. Think Bretton Woods, 1946, than it has anything to do with sort of what's going on in the actual economy. This has everything to do with the banksters' crookery. It's really that simple, folks. Just think M2 money supply. And, I don't want to sound like a broken record, but if you want a very real education on this concept of money and who actually controls our society and how they control our society, then I would strongly suggest that you watch this video. Unfortunately, though, once you watch it, I can't make you unwatch it. So if you really want to know how our society works and who drives what, and you can see how old this is. This is hundreds and hundreds, if not thousands of years of human history. This guy has absolutely done the best job I've ever seen about anybody trying to really explain how money works. Anyway, point of the matter is that I believe that 1970s, 1980s was sort of that. It was like, I think, like the second turning, if you would. I don't think I have that phraseology correctly, but it was a turning point. And, at that point, they could actually start justifying things like actually running budget deficits. There were actually a lot of people, George Bush Sr., and this is why I think George Bush Sr. actually helped develop Bitcoin, because George Bush Sr., he didn't buy into any of this bullshit. He used to call it like voodoo economics, and frankly speaking, it is. And that's being complimentary. Other people call it just absolute outright fraud and theft. And of course, those are the guys like Milton Friedman. And of course, the banksters, they try to, drive Milton Friedman into the ground. And they espouse this guy Alexander Hamilton, the first Federalist, and they actually funded Broadway plays on this wonderful banker. All right, we're going to create a Broadway play about a banker. You got to be kidding me! And what's ironic is that I think he died in a duel. So, obviously, back in those days, that's how you settled disagreements. Anyway, God, I keep going off on 20 different tangents. So the point being of that tangent was, if you want to understand how the money system works, I get the impression, watch this video, but I get the impression that we are going to see a massive additional wave of inflation. This was all around Bretton Woods. This was actually after the end of the Second World War. So you could make an argument it had nothing to do with the war, everything to do with the Great Reset of that particular generation. And actually I used to, but this is dangerous, opening up this can of worms. But I used to show you guys a really cool historical chart that I put together. I think this might be it. That I think actually explains this economy perfectly. I don't know. Does that look right? That doesn't look very right. And yeah, let's see. This should be back here. Oh yeah, maybe. No, this isn't the one. But this is an interesting chart, nonetheless. Let's see what we got here. Boom. So this is basically, greed cycle, fear cycle, greed cycle. And of course, you got your Great Reset all in here, 45, 46. One of the questions I always asked was, why on earth did stock prices all of a sudden go crazy like this? And the irony of it all, it had nothing to do with the actual companies. And it had everything to do with them hyperinflating the currency, making this currency itself worthless. And stocks are just like, hey, I'm a stock. This is the value of my company. I don't care. We want to value it in watermelons or US dollars. If you dilute the value of your watermelon, well, then the stock price has to go up because the stock is the stock is the stock. But there's a better chart that I had that shows this. And it's quite remarkable when you just look at it side by side. I've shown you guys this before, but yeah, what the hell? See if we can show it to you again. Didn't you know where it is? I thought it was this one here, but where did I put it? Problem is, I just have too many darn charts. I got a lot of charts. I got more charts than I know what to do with. Darn. I don't know what the heck I've done with it. It should be in like here. Oh, maybe it's in here. There's Jupiter. Somebody was asking about the Saturn Jupiter crosses. And really, that's what this is right here, right? Fear greed. But actually, there's an even better one that I've been showing people. It's the Saturn Pluto cross, thanks to Shane. Yeah. But I want to just load this up, and then if we open it up for questions, and where was I? I was so close there. Cycles. Okay, so here, I'm going to open this one up so I can show you that in a bit, but that's not what I wanted to show you. Okay. I think this is it. Well, whoops. Fudge. Now what did I do? I think I should load all these things up ahead of time, right? Anyway. Okay, let's just open these, see what the hell we get. All right, so is this the one I wanted to show you? No, I showed you that one already. Put that away. Oh, and actually that one was a good example. So, all right, now Brian's just going crazy. This is where it's handy to be able to fast forward. Wait till he's actually back talking about stuff again. Okay, so here's the Jupiter Saturn cross, and this is incredible how accurate this is. So that's going back, a century, but just a simple sine wave every 17 and a half years, and just think of it in simplest terms that this is 35 years, typical generation. So 17 and a half years of growth, 17 and a half years of regression, 17 and a half years of growth, 17 and a half years of regression, 17 and a half years of growth, 17 and a half years of regression, 17 and a half years of growth. So we are in the midst of a growth cycle right now. And, actually, I don't have it here, but you can see there will be 17 and a half years of growth, and then there should be 17 and a half years of regression. I don't know what it's going to look like. You never know. Unfortunately, I don't even know what the hell this is going to look like, but it looks to me, just on balance, that the banksters have won. So I don't think they have to worry about losing control. Here is the current price action. So you can see how we're just sort of muddling along here. And of course, here's 22, 23 Benner cycle, which, as we said, interesting how if we follow along historically, you can see as of January 2024, stock market goes booming higher here after a period of consolidation. This was following the 87 crash. And in the greatest generation, this is sort of like 1940s, and you can see what they did into the 1950s and early 60s, just relentless straight up. Now, I don't know what's going to play out here, but my hunch is once we get on the other side of this current Fed rate hiking cycle. I think you're going to see a pretty substantial move higher in the market. But I also think that it's going to be coupled with a big inflation push. So as a result, and it's funny because guys like Peter Schiff and stuff like that, they've been gold bugs all along here. And they've probably been sort of sitting there going, when's it our turn? When's it our turn? When is this supposed to happen? And ironically enough, it will actually happen once the feds and the banksters get control of the system with this new model of money supply. And what the hell do I mean by that? Well, I don't know whether you've noticed or not. And there's a really great let's go really simply put, there's a really great way to see how they are resetting our society. And you just type in M2. What is the actual number of dollars out there in the world? Now, how the hell does that make any sense whatsoever? I mean, that is your great reset image. Now, as we said, the Fed's trying to sort of, we're responsible. Yeah, we're this is all about controlling inflation, isn't it? Yeah, okay. Yeah. So did they buy it? Yeah, they did. Fucking A. I mean, really, the bottom line here is, and this is where it's like which came first, the chicken or the egg? Because you can make an argument that, well, our modern day quasi socialist society, MMT, all that bullshit. It's the enlightening of our society, which is redistributing wealth from the rich to the poor to try and help balance this human experience. Right? Did they buy that shit? Did they buy it? I would make the argument that what this is nothing more than basically they've turned the money printers on here and they're just not stopping. And it's gotten out of control. And Mr. Druckenmiller was kind of like, what the fuck are you doing to our society? Why are you doing this to us? And I think this all circles back to there was a Fed governor in, I think, about 2017, and it'd be cool to have that tweet. I know it's somewhere in my tweets, but he basically said that once debt to GDP hits 120, 130%, there's no more lending. It's over, right? Your economy will either break or you have to go and hyperinflate your economy and make it so that GDP is like, debt is like 50% of GDP. But if debt is at 150% GDP, then that literally means you have to expand your economy threefold. And how do you do that? Well, just go print a whole shitload of money. That's exactly what this image is. They just turn the printers on. And the worst part about it is the government. And it's fascinating, for the longest time, I mean, something like a 1 trillion, he never said the word trillion, and never. I mean, what the hell is a trillion? None of us can even imagine what $1 trillion is. So how the hell do we justify now this? I mean, keep in mind, when I started this game, right? First job I got in this business was right here. When everything, the entire money supply was $1 trillion. That's stock market, bonds, cash, everything. And now, I mean, literally, so the world that I started working in the market in, you can see this was the slope of the M2 money supply growth. So you can see how it's just literally going parabolic here. Now, do you actually believe that they've gotten control of this thing? I don't know. I mean, the sad part about it is you go to substitute drama teachers who don't understand this at all. I mean, this is just so far beyond his pay grade that it's just like you're speaking to a monkey trying to explain this to him. To him, he sees no problem with this. And so as a result, I showed you those, double digits US inflation rates. You see what the Canadian money supply is. there's no quit in the inflation here in Canada. And what the hell is this going to look like in 47 or, in 27 when inflation really is a problem? I mean, literally the standard of living of Canadians might fall in half again, right? Just terrible. Oh, you want that one? It's not that big of a deal. All you got to do is just type in money masters, right? And do YouTube, right? Boom, there you go. And this isn't even a Google search. You do a Google search, and there it is, very first link. Anyway,
government is more powerful than the federal government. It's more powerful than the president, the Congress, and the courts.
there you go. Merry Christmas.
Challenge me on that, but let me prove my.
So, does it make sense that into 2027, we could actually see these gold stocks actually do pretty well? And because inflation is a problem. And keep in mind through here, and this was the 87 crash. Through here, this was Ronald Reagan, just went absolutely insane, deficit spending. Voodoo economics, as Mr. Bush Sr. pointed out, and it wasn't sustainable. I mean, the stock market went absolutely crazy through this period. But the interesting thing is if you go back and look at time, and I wanted to show you this image, but I could show you it here. Notice, right? Where's 47? There's 47 right in there. So I think that this is the coming stock market rally boom that we could be seeing developing now. Notice that says July 46. So, we're sort of like down here right now. I got to show you that there's a better chart to show you that I have. We'll go down this rabbit hole again. Hold on. Okay, so we tried that other one and it didn't work. Maybe. I was going to say Bitcoin. I don't know. Maybe this works. Hey, that's the one I wanted. All right. So if we take out, and this is where it gets really scary. There is, Bretton Woods, the end of the Second World War. You can see there's 45, 46. This is 47, where all that horrible inflation number comes in. And then notice, look what happens afterward. The stock market just goes absolutely insane. So I think what has to happen here is here we are. We're down in this part right in here, right? You can see. So yeah, it's so remarkable how similar this is. So we're down in sort of like this, you could even look at this as an inverted head and shoulders, right? So left shoulder, head, right shoulder. So we're down in this part right down in here, just muddling our way through this. I wouldn't be surprised that, 23, we find our cycle bottom. And, as I showed you on that January barometer, it looks like they're expecting a market bottom to come in here through 23. They're going to ramp the market up. This is our upcoming rally in the market right now into that 46, 47 window. And through this rally window, that's where, do I still have it? Put it away, didn't I? Darn it. Too much stuff to talk about. Oh well. Anyway, that's where your Bitcoin has a pretty good rally. And I think, alts to a certain degree. I'm hearing Chico getting all excited about Ethereum, and you better own your 32 Ethereums. And there's going to be a whole bunch of airdrops and a whole bunch of, every bull cycle, it happens the exact same way. They bring out a new protocol. They airdrop coins into the universe of people that already own the asset. And all of a sudden, the airdrop coins go like 100x, and guys are like, "Woo, I'm rich." So I can already start to see the narrative of this next cycle coming. your key job here is to figure out who are sort of going to be the survivors on the other side of the cull here. That's going back to our Bitcoin chart, wherever we are here. No, darn. Anyway, I had done that cycle chart with the Bitcoin on it, but I don't know what the hell I did with it. That's not this one. That's that fear greed cycle. Maybe I have it over here. Oh yeah, here it is. Cool. All right. So, interesting how our cycle bottoms. Remember, we said 15, 16. This is the bottom that I think this year is going to look like. I don't think it's going to look like the last cycle. And they always say, right, history never repeats. It rhymes, but it never repeats. So I actually need to update this. This is, I think, as of sort of the summer. So we've actually bumped along, and I think it even made a new low here, if I'm not mistaken. Maybe we have, maybe we haven't. But we're just sort of bumping along here. And I think we bump along for the better part of this year. Then, of course, we got halvenings coming up. So get ready. 6 months ahead of the halvening, away we go. So be it things like Newmont, right? I'm basically telling people on the site that, and actually this is a really cool commentary. So this is sort of like, okay, I'm an investor, right? And this is long-term cycle analysis. So you're like, okay, so this is a half decent idea. I think we want to try and set ourselves up to take a shot here in appropriate buying zones. So we draw on our levels, and you can see my anticipation right now. We're just right here. But my anticipation is that we work our way up into mountain man levels here over the next, 6-8 months kind of idea. That's this move. Then I expect a dump down into these lows. And this is where the economy starts rolling over, and people are all worried about deflation. The Fed's gone too far. My hunch is the Fed will capitulate. Remember, this is supposed to happen over the whole year period, maybe even a couple of years kind of idea. And then that sets up the base when the Fed capitulates and then starts saying, here's all the money you want, right? And 1947 comparisons, double-digit interest rates or inflation rates, and double-digit interest rates again too, probably. And then we get this big honking inflationary push right into that 26, 27 window, just like 87. Almost textbook. I could see it. But the point here is, if I wanted to trade this, then I actually want to sort of dissect this. So next thing I'm going to do after I did those two big studies is I'm going to go, okay, well, what are some levels for me to think about? So this is that weekly chart. And when I pull up the weekly chart, there is that big W and the sort of consolidation and breakout. So when I pull up the big W, what I first notice is that seasonally, this isn't the time of year for this thing to be rallying. So there's something that's disconnected about this market. And frankly speaking, I don't know whether you've noticed in the world, but everything's disconnected. Barstool guys are stock pickers, right? And who's the latest stock picker du jour? Well, anyway, I'm seeing I was telling Chris earlier, I can't believe how many 20-year-old kids are now expert stock pickers. It's remarkable. On YouTube, they're everywhere. Say you'd almost think it's like shooting fish in a barrel, making money at trading stocks. Anyway, point here is you can see we had this very funny sort of V bottom and we had a V top, and that to me screams diamond. So if this is a diamond, then really all I do is I just take this range going back to the original diamond breakout pattern, and I just replicate it on the other side to give you this sort of market symmetry look. And considering we're thinking that this yellow line is our course, right? That was that 2.618 to Foggenbaum big rally into 07 or 27. Jeez, can't get the years right. So that means we probably do something like this. So that means in the short term, I'm actually looking for gold to rally back up into reload zones, way up top here. Can't really do a trade here. We're kind of like in no man's land. I can buy against the bottom end range. I can sell against the top end of range. And if this is some big honking diamond, And from an investment perspective, you really only want to act when you see either the top taken out or the bottom taken out. So this is still, in my opinion, very much a trading range. So we scroll down to the next level. And we ask, what are the indicators doing? You can see the indicators, W there, W there, W there. Willie was stupidly oversold. That was a great buying window down there, but hindsight's 2020. Anyway, we're working our way up here. This thing has got a head of steam behind it. So I wouldn't be surprised if this continues on. There's 61.8. And interesting enough, we had a big weekly gap that was getting filled right now. We might have some play against there. But the next big objective, you can see weekly gap way up here, up at Mountain Man level, way up top. So I think, this thing might just go straight line, straight up here. The momentum is very, very strong. So what do I do next? All right, I still want to try and get in on this thing. How the hell am I going to do this? Well, let's take a look at the weekly chart. What's going on, or the daily chart? What the hell's going on here? All right, so there's some gaps. There's another gap in here. There's another big gap up at that 61.8. That's what I was sort of thinking that should be filled in. You notice lots of W's in the momentum indicators as well. Just super bullish. Very, very bullish. So lots of anecdotal evidence that she wants to point higher. The only problem is can't chase, not allowed to chase. This is way too high, right? Not allowed to chase. Got a trade setup. So what the hell did this setup look like? And am I too late? Well, quite often what you find when you look at investment ideas is you kind of go, yeah, I am too late. Because quite literally, like we said, if my upside target is here, and I don't like this. I see this a lot out of social media people. They'll go, all right, well, I'm willing to take that trade. And it's 0.9 to 1. Oh, hey, you know what? Let's shoot for Mountain Man. Let's get that 1-to-1 risk reward ratio. That's a potion for disaster. It's not sustainable over time. And I see guys, they bang out the 1-to-1 wins and they're like, yeah, look at me. I'm an awesome trader. And the problem there is it's just one trade. How many out of like 100 trades actually work? And if you're just banging out 1-to-1s and you're like just even a scratch trader over the long term, you're not making any money. It's just, you're just grinding sideways. So I don't really like the risk reward of just buying the market there, risking, because keep in mind, that's a V bottom. At some point, this thing's got to be tested. You guys in crypto all know what, testing bottoms of ranges looks like now. So I don't really like the idea of stepping in there. I like the idea that Newmont's moving higher, and this is a gold stock, and it's actually sort of it's the biggest gold stock around. So they always say, as stocks go, so goes the commodity. All right, so what the hell is going on here? How the hell am I going to trade this damn shit, Beamish, man? This is a waste of my time. So what I see here is now we're drilled down to like the 4-hour chart. So now we can sort of see, and really, I don't even mind if we were on the daily chart, this is what it would be. So we looked at the weekly charts. We saw momentum was pointing up, but we kind of saw that maybe we're a little bit late. So what is going on here? And this is where, trend continuation chart patterns help out a lot. So this is my funny little bot setup, and just to make it easier so you can see this, I'll get rid of these extra lines. So A to B, consolidation, C to D, nice little trend continuation move, paints a target of 57.5. And then notice too that off of the entire range, that is 38.2 of the range. And of course, this is our dump chaser zone. And actually, Colin, I need some feedback from you if you are going to watch this later on. I think he watches these, but I'm not sure. I'm more than happy to call this Colin's dump chaser zone or Colin's pump chaser zone. I love making you guys famous, and I don't have a problem with that whatsoever. It's just at the same time, too, I don't want you to go, quit using my name, man. If you want to talk about it, fine. Just call it, whatever, the dump chaser zone. But Colin, if you like it, I'm more than happy to call it Colin's dump chaser zone. Anyway, point of the matter here is dead cat bounce. This was a V bottom into 38.2 to 50%. Everything that we teach in the school, everything that we teach in the program is just common sense. This is what happens, right? I call this the first stop target, because this at any given point in time, you should expect a bounce into 38.2. And that's exactly what's happening here. Notice the botters. If I always like to take structural trades on the other sides of trend lines. This is an interesting one, 1, 2, 3. So it looks like it's valid. We broke out through the top of it. Then we came back down. The moving averages, you can see we slammed into the moving averages and they're pointing bullishly. And that acted as support. And then we just gapped higher. I'm not going to say this is an easy trade to take, but I think A, B, C, D, this is the setup, and you should be long from 48.30, basically off of this double bottom breakout level. You also have this one. Would have been tough because this market literally gapped higher and you had to go with it. And this is what's called a gap and go setup. But you can see it's just chung, 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 chung. If you're kind of like, well, Brian, I can't trade that. That's too volatile. Then what I would just simply say is, we have a pretty good idea of where it wants to go. A, B, C, D targets, 2.618, 4.669s, 38.2s. Lots of confluence of levels up top here. Big juicy gap that needs filling in, blah, blah, blah. So then at that point, once that actually happens, then you're going to draw your reload zone going the other way. And notice, hey, gee whiz, that looks like a pretty interesting buy window right in there. So this is just assuming always makes an ass out of you and me. So be flexible and understand this could come in anywhere here. In fact, we could go all the way up to 127s and 1.618s. Very realistic. There's 50% level. Hell, there's GAN all the way up there. Very rarely do you see the market go straight up into GAN like that. Bitcoin did that a year or two ago, but it did put in a bit of structure, and I don't see any structure here. To me, this still feels like a dead cat bounce. Anyway, rally up into this resistance area, then a pullback, and it would be on this subsequent pullback. That's where I'd actually be looking for my entry, because clearly I've missed the trade here. You can't chase that. So somebody had been posting, really interested in this stock, or gold, right, for that matter. And I'm kind of like, yeah, I hear you, kind of like Sam Bankman-Fried. Yeah, I hear you, but I still am not going to buy. Sorry. I do like the idea of this rallying up into here. Lots of confluence of that level there. I really like that. But then what I would be doing is I would be doing either one of two things. Number one, I would be saying, all right, if this is trend continuation and we're just going to keep going straight up, then I want to think bought, right? So that's, do I see at least 33% correction, but no more than 66? So if we come down here and, let's say we go up here, then we come down here, and then we go like that, and 3 higher lows, well, then it's A to B, clone that, C to D, upside targets are up there. That's not a bad idea. Or conversely, rally up, maybe M out, work its way down into reload zones, and then start working its way back up following the reload zone. This would imply more of like a long-term base, and that would actually be healthier for price if it did this. If it just does the bot setup and just trend continuation heading higher, then that means at some point down the road, we got to come back down. So the point here is this is looking at the very low time frame, like 4-hour chart. Thinking about, I like the idea of that long-term Newmont gold trade, but I'm not allowed to chase. So then I have to, once I've sort of figured out a higher time frame, I would like to participate. Then I have to drill down to the lower time frame and hunt my setups and really, either take bot long trend continuation trades, which basically is exactly what this is. And it's interesting how the market set this 25 level up almost perfectly off this bottom. And conversely, not allowed to chase. So we got to let this thing play itself out. work its way back down and consolidate, and then we have to think about a turn. So I don't know whether that helps or not. I guess what I'm also trying to say with all this, of course, all you Bitcoiners, is I'm thinking that Bitcoin wants to ultimately bottom through this window. So could we see something like this? Sure. Perfectly fine. Breakout trade bot. It's a name that I used for ABC trade, trend continuation trade setups when I used to be a prop trader there, Mr. Prince. So it's a trade setup that I basically labeled myself. You won't hear anybody else on the internet ever talk about it. And I used to say, when I turn myself into a robot, I trade like a machine. Anyway. But the point, I guess, here is if Newmont is feeling more comfortable and happier, what usually ends up happening is Newmont doesn't like to go do exploration work. Interesting. V top puts in a base, boom, new highs. V top putting in a base. I don't think we've quite based yet, but I think we are putting in a base now. And then I expect that blast up top. But point here is Newmont's catching a bit of a bid. So if you were interested in it, the trade's already rocking and rolling, and it's probably about 2/3 of the way done now. But what do these guys do when they start running out of ore? What they do is they just look down the food chain and they look at other gold companies. And if their properties are anywhere near Newmont's, then they'll just go and buy the property out. And boom, all of a sudden they've just doubled their resource base. And that's where I think that the opportunity is really going to lie. And it's kind of funny because there's this guy, Alan, for lack of a better term, who actually really likes this particular gold stock. And frankly speaking, I look at this gold stock and I like it a lot. I mean, you know, Brian, cheap ass, I can come in at the bottom end of range and buy, I will. So you can see 88.6 of this entire range was $1.90 here. And look at what they're doing to this stock down here. And of course, Alan came out and he said how much he loved this stock at this level. So I originally bought this double bottom, that W right there, that 190 level on the pullback here. And I actually am thinking I'll probably go and add some more if this thing W's out. But this is where I think that the opportunity is really going to lie in the gold space. There will be millionaires made out of this, because a company like Newmont, they're not going to go and spend a whole bunch of money on exploration. They're just going to simply come along. They'll come along to a company like this and they say, all right, we'll buy you out for $10 a share. Boom, done. There's the cash. We want you. So keep your eyes out for this kind of opportunity over the next year or two. There's going to be a lot of this. I also had another one, GOT, Goliath. This is one that we were able to get in off of this double bottom down here. These guys are supposed to have just an absolute monster resource. And I fully expect that the smart money is going to come in and just gobble this guy up. I don't think it's a good idea to go in and buy this thing here now. But that's another example of these little junior gold stocks, that this is the way that those big companies like Newmont actually expand their balance sheets. So there's also another one that I noticed here. And all I really did was I just went on FinViz. And you know, this is about, you know, us just hunting weekly W's, right? I just went screener. I went on here. I just said the gold sector, show me some gold charts and show me some weekly W's. And gee whiz, there's a few of them, eh? And look at this one here, this AAU, Amadan Minerals. I mean, look at that chart. So you can imagine Brian's probably going to go do some shopping this coming week. Interestingly enough, I think that they would actually be in their best interest to roll the stock back 10 for 1. That would mean that there would only be 13 million shares out, though. That's pretty light. Maybe they do like 5-for-1 or something like that. Maybe I'll make it like 20, 30 million shares out. That's a tough one. What I have seen, of course, here, this kind of starts to meet things like CanSlim requirements, a bit of insider ownership, so that's always good. EPS growth 25%, EPS quarter over quarter 89%. Those are pretty good numbers. A little bit heavy on the stock out, though. That's a little bit bothersome. But nonetheless, if this guy's actually making some money, then shares outstanding is not the end of the world. What's interesting about this, right, is Mexico. Does this have anything to do with their deposit, or does this, any kind of price weakness right now have everything to do with the Chapa and all that crap going on down there? What I thought was interesting about this company is they've actually won some awards, and they're actually trying to be a politically correct operator in the mining space. So, that's always sort of iffy, but, these, they're working with environmental stewardship, community engagement. Like, that was half the sort of negative comment about this space in the mining sector is, of course, they just absolutely destroy the local environment and they take advantage of the local population. So these guys are trying to a certain degree to engage with the local population. I found it, they won, like United Nations awards and all that kind of crap. So I did find it kind of interesting that they have a politically correct bent to the story. And you look at the chart, I gotta say, that's that. I think it's AAM. I'll be buying it in my registered plan. But maybe it's AMM. Yeah, there it is. It is a Canadian company. I gotta say that's looking pretty darn compelling. I mean, nice base, happened over a very long period of time. You can see it's starting to climb the wall of worry. Maybe throw your stink bid down there at 30 cents or something along those lines. Pick up like 10,000. And they ramp this thing up to a buck or two, let a whack of it go, get it that free position. And then if that gold market does what I think it's going to do into 26, 27, this thing probably is like $10, $20 a share if it's not taken out. And the property's not bad, so all I did was I just pulled up these FinViz charts and just say, please show me weekly W's. There's a bunch of them on here for this gold sector. So I look at this one, CDE. Look at that, beautiful. With an outside upside reversal, all our spread traders, Zach and Joe. I mean, look at that, beautiful outside upside reversal bar there, right off that double bottom. So like a triple bottom level there. That's a pretty good looking stock. It's a little bit heavy. I would like to see that they're actually earning some money. Debt levels are a little bit high on this guy. But you can see they're trying to turn the corner here. Yeah, could you get 50% bounces on these things? It's interesting that the streets targets price only 4.25. So maybe not on this one. But I would just simply go through these one at a time, looking at the fundamental story. Looking to see whether you can get any catalyst or anything to justify the stock price moving up. Here is that Allen stock that I was telling you about, Goro. I mean, look at that. I mean, it just looks perfect. And they're actually earning numbers. Look at these earnings numbers. I mean, right now, still a little bit soft, but look at what they're expecting down the road. So, 11 times earnings. It's not great. It's not terrible. Nice that they've got no debt, relatively low share count. That's not terrible either. $4.62 as a street target. So could you get a pop back to like $3 or something here through the spring to get yourself a risk-free trade? I think so. So the point here is that if the big boys are doing good, then these things should catch a bid. Somebody asked, hey, how's your CLAS doing? And they went off the board. So very poorly. And it turns out the whole fucking thing was a scam. So I'm not going to sugarcoat it. There it is. It's on the H board now. And are they actually even giving a quote? No. So he's still in the penalty box, hasn't moved an inch on the Canadian market, showing 2.5 to 3.5. But this turned out to be a total wash. So, I mean, I'll call a spade a spade. If anything, this is half the reason why you do not put more than 5% of your stake into any one idea. Because sometimes this is exactly what happens. This is why, DMAC, you have to sell half on a double. Get that risk-free trade on. And then, if you have a knucklehead like this one, you can ride with the punches. You can see, so I'm not getting anything. This thing, it was at least listed on the bulletin board down in the States, but I don't even see that anymore. So if anything, really good. Yeah, I don't even see the bulletin board listing. Because I know that they said that they were listing on the bulletin board, but nope. So full answer for you. It went absolutely horribly. And this is the way this shit goes sometimes. It sucks. So if you do go by that Goro or any of these things, for God's sake, sell half on a double, get your original capital back in your hands as fast as possible, and add the free shares to your pile, and move on to the next one, because it does happen. I'm not going to sugarcoat it. So hopefully that answers your question. I will say too, made a little bit of a mistake on this one in that the criteria for VCIM, and anybody watching this who wants to know the strict criteria, is roll the stock back, options to directors, shares for debt. And this one, they did a convertible debenture offering. And that was the warning sign that this did not follow the VCIM model. And I learned the hard way. It's painful. No doubt about it. So if anything, talking about this kind of stuff is actually what will make the regulators with me relatively happy, because they'll look at this and they'll go, okay, at least the guy's not bullshitting people. He's taking ownership of his shitty ideas, and he's talking about 5% risk. And this is why you have to have those rules of trading in your trading. And even if you invest in Bitcoin, don't put more than 5% of your stake. We had some people on the site who went tits deep into that Luna and got absolutely destroyed. So this is yet another good example of why you do not take more than 5% risk in your portfolio of any one particular name. All right. Let's see. So I do like the gold sector right now. Interestingly enough, I don't know, biotech and pharma, I'm not overly impressed. Not as much as I used to, and especially with the rising interest rate environment. It's tough for these little junior biotechs to get going in earnest. Another part of the market that I actually do like right now, actually there's a couple, but I really like the soybean market of all things. Trend continuation trade is probably more what I'd be thinking here. Usually January, February, we get a little bit of a pullback. And then I suppose as soon as doofus over there in Russia starts launching a new fucking war on the West, we're probably going to see commodity prices all start to zip higher there in the middle to the end of February. Soybeans, of course, grain market. I think actually this has more to do with the U.S. growing conditions and the droughts and stuff in the potential U.S. than anything to do with Russia or Ukraine. But nonetheless, they're in a bull cycle. Larry was talking about how he made $1 million in the 70s soybean market. I don't know whether we go back to that. No, we don't. But he was pointing out that over the years, he found that years that end in 3 are actually pretty, nope, that's not what I want, pretty friendly for soybeans. So if we look at 2013, well, actually, I guess we topped there 2012. So 12, 13. So I guess 13 wasn't that good of a year for soybean. Okay, so that throws that out the window. Let's go 2003. Yeah, 2003 was a pretty good year for soybeans. 1993, that was this bull market. So soybeans did okay there. 1983, big rally in the beans. And 1973, oh my goodness, insane rally. So only one of these actually didn't perform. Actually, yeah, one, right? 1, 2, 3, 4, 5, 6, 5. That's 5 out of the 6 years. The crude oil trade goes buy your unleaded in the middle of February, sell in the middle of May, made money 9 out of the past 10 years. So this one's you buy your soybeans in the middle of 2000 or beginning of 2023, or not 2000 years ending in 3, and sell it in the summer peak of years ending in 3. You made money 5 out of the past 10, 5 out of the past 6 years. It's probably statistically in that area. So could we see a soybean rally here through the year of 2023? I think so. I'm hearing a lot of chatter about people being bullish of the beans. Beans in the teens. Oh, they're already in the teens. What the hell? Maybe beans in the 20s. I don't know, something like that. We went and broke this high. So whatever little wedge that was working there has been removed. So we'll see how this works. I mean, maybe all we do is just rally back up top here, but I do like the beans here in this really tough market. Also like Coca-Cola, of course, Mr. Buffett going on about how much he loves Coke. But it was that almost sounds funny in this day and age. But what I found interesting about Coca-Cola is that he broke out, that was that 2019-20 peak, the crisis dump. And notice that Coke didn't really participate that much through this rally. Like some of these stocks went absolutely nuts, right? And unfortunately, they've all come back down to earth, like Amazon, right? Let's see where there's that 1920. I mean, look at what it did in relation, and then it had to come all the way back down. So I don't know whether, interesting enough, I don't even know whether Coke even does break back down here. It was interesting how they broke it down and then they violently ripped it right back up. But this is one that, like, if through the summer we see them bring the market back down and we start to see the market turn back up, I think you could make the argument, I will keep a close eye on this reload zone in here. I think right now they're setting up top end of the range. It's pretty obvious, reload zones, right? And if I can get a pullback down into fill these gaps in here, I think that would be a really interesting buying window. So I'm going to keep an eye on him. I wouldn't mind adding like 100 shares or something like that to my RSP. I think that would be a good idea. So there's that kind of stock. I'm not really a fan of the tech, and I don't think Bitcoin stuff has turned back up, but you can see we like the soybeans. Interestingly enough, this is a play on the soybean market. This is a fertilizer company. So I kind of like the look of him, but I want to see, of course, a nice W on the other side of this trend line. But you can see how he's firming up. So can we get some sort of bot set up here through the spring? Yeah, I kind of like that idea. This would be a pharma name that I would take a good look at. Fulcrum Therapeutics. Our OG David, he actually spat this one up here. Now that I've got this little trend line break, if I could get a nice little W down in here, that's not a bad idea. Take a shot at him. I suppose we could also do foggy boggies off of this W now. So these are the kind of ideas that I'd be interested in. Nope, that's not what I want. I want that one. Yeah. So, and really on balance, what we should be thinking about is 50% rolls. Good old WD GAN. So you got 2.618s, 4.669s, all up in this area here. Well, I wouldn't be surprised if they pop it. We jump up into here. Now we may have to I could easily see we rally up to 2.618, then come back down, check the original breakout, break that trend line. And then if you got a W in here, you get your shot up to that 50% level. That's probably what I'll be keeping an eye on him. So anyway, there's a few ideas for you to chew on. Of course, no guarantees from the management. I eat my own cooking. I bought that CLAS stock and got thumped. Suppose it represented a good tax loss selling opportunity. And of course, it wasn't fun. But I'm not going to tell you what to buy. If anything, what I'm hoping to do here, try, as I actually pointed out in the lounge, somebody said, Brian, we need you to get the market back up on its feet. And I'm like, dude, there's not much I can do. I mean, if this market is an ass, it's an ass, and it will just remain an ass for a while. I can try and be the demonstrator of best practices, but I can't push a chain. That's for darn sure. Actually, this is a really good anecdote to finish off on here. So we built this algorithm on the TRI site recently. And this was based off of work that I've been doing over the past 20, 30 years on my own. But I built this with our CTO, Seward. He sort of brought this algorithm of measuring the market strength or weakness into the 21st century. I think on balance, the signaling system seems to work fairly well. The only issue here is the automation of signals. Murphy's Law, most time these darn signals come in when you're fast asleep. It's just what happens. I'm okay with taking a bit of slippage on these trade ideas, just for demonstration purposes. First and foremost, we can't really shill a product like this unless we actually have a track record. In recent marketing material, we sort of put together a hypothetical, but until we actually have the actual trades on the books, you can't really sell it as like, hey, this is what we're doing. Come do it too. So I'm going through the process right now, me manually, of just logging trades as they come in. And of course, Murphy's Law, as soon as you do that, the system and the algorithm, they're going to test your resolve to see whether you're really serious about this or not. So as you know, notice the whole damn market, the breadth of the market has turned back out. I don't think it's in your best interest to argue that. The employment report data that we had out on Friday was pretty market friendly. And as that sort of January barometer image showed you, the whole damn market just lifted coming out of that. That was this image. I mean, it was a pretty big rally. And actually, you even start to see a lot of the news reporting services are saying the light at the end of the tunnel is starting to shine. We can start to see a base coming into the market for the end of the year. I thought it was interesting that according to our, the breadth indicator is pointing up right across the board. I think there's going to be a bit of a follow through on this rally. How long lasting it is, that's anybody's guess. But it does look to me like we've got a bit of inertia. Fascinating thing is crypto actually turned up back in the middle of December. I noticed, and I'm not quite sure why, I did send a message to our CTO wondering why our crypto universe breadth has not been updated. But I did notice that the signaling system, and we've been having a little problem with the crypto top 30, of course, Murphy's Law. But nonetheless, hopefully we're pointed in the right direction. But I don't know whether it was data-driven wise or actual, we kind of messed up with the data actually not reporting correctly. I'm not quite sure. But it flashed a sell signal. So, live by the sword, die by the sword. I took the first trade we had off the books and booked my loss, about at 0.8%. And I'll just be tracking this through the year. And as we sort of go along, we'll just see how good or bad we are at this. But But you notice that, hey, we crossed back bullish. Fast is back above 100, slow again. So as you saw from the spreadsheet, I went right back in and bought the position back. And you can see my little slippage here, getting slippy. So what should happen here is you should take these minor sort of slippage losses when we're going through this funny, and you'll get this period in this algo. I've seen it lots of times where you might get a head fake up, head fake down, and then the market starts moving in the direction, and you really just won't need to be in whatever direction the market is pointing. So we pointed back to the bull side, so Brian went and bought the position back. Just live by the sword, die by the sword. It's the way it goes. I'm pretty pleased with what I'm seeing here. This makes sense. I mean, you look right across the board. As I said, that employment report was pretty friendly. I mean, you never know how long lasting these moves are. I mean, I could make the argument just looking at the stock market that we go boo-ba-da-boo. And then we go boobity schmoo. I should be looking on something like the S&Ps for a rally up into this 40-20 area. You can see we're 39 for 13. So that alone in the stock market represents about 100-point rally here. Or what is that? That's about 2, 3, maybe 4% rally. That wouldn't surprise me. Probably also too, we could start drawing some fibs. Interesting, when we pull back the chart, notice 4.669 is basically a tag of whatever that previous high was. Is this manufactured to actually create enough inertia and energy to go after that high? And then we went after the stops. It wouldn't surprise me. And we could probably do a Foggenbaum going this way, and 2.618 explains that, and 4.669, ooh, just missed there, right? So 2.618 sure got some nice action in there, and also notice that's a pivot on the other way too. So we'll see how it goes. Hey, there might be one little FU against these lows and then head up. I don't know. But what I would say is it feels as though the market's trying to, on that Friday employment report, the market, it caught a really nice bid. Now, you know, how much of that is derivatives related? Friday is an options expiry day. We'll see. Only time will tell. But that's a good looking W, you know? I mean, that's a W within a W. We teach that in our course. Actually, speaking of which, we have a new education program coming up here pretty soon. So we also have a raffle. So maybe if we're lucky, we can change somebody's life and they can do it all for free. I will say though, and I've seen this happen many times, only 1 or 2 students who actually won the raffle actually really apply themselves. The first guy who won the raffle, David, he is actually still on the site. That was like 6-7 years ago. And he's done really, really well. I'm very proud of him. So we used to say that you're only going to value this information based on how much you have to pay for it. So some people, it's not actually in their best interest to win the raffle. They actually, to really learn this stuff, to get good at it. Some people, you know, I've had others who, you know, for one reason or another, started working with me, and, you know, we comped them the education program. That wasn't in their best interest because they, you know, when you get given the information, you don't put a value on it. Sad, but it's the way the world goes. So anyway, for the record, I am back long, strong, and playing ping pong, or something like that. Actually, just on the short term, it's a little bit premature, but on the short term, did see potential bull flags. I can't really call this a bot setup. I mean, that's awfully close. Well, maybe I could. I'll be flexible today. So we had a rally up top, and I don't know whether this rally happened before this event. It's interesting how 33% is basically those lows. So with that bullish turn, suppose you could make the argument you could hunt bullish bot setups. So we'll go bot setup and then bot trade. And just this cute little ABCD. Remember we talked about sort of trend continuation there on the S&P 500. Kind of looks like, there's a base in there and they want to take the market up. Well, same thing here. If I am a bot trader, I want to see 1 low, 2 lows, 3 lows, big pop, which goes through that bot entry level. So if you bought on a stop there, I really wouldn't have a problem. Boom, they take out the first low. We call this the noob stop. And maybe they just head it right back up now. You never know in this crazy game. I did mention the other day, I thought it was really interesting. I was going back and watching some predictions on how this Ukraine war would go. And this fancy schmancy CIA agent dude who kind of looked like a hippie, but nonetheless, he was predicting that Russia would just steamroll over the Ukraine, and that was going to be it of Ukraine. So it just goes to show, this is Mr. Smarty Pants, CIA. I got paid a bazillion gazillion dollars for being able to predict what's going to happen in the future, and he couldn't even do that. And I often tell people there was a guy back last century who was like, after the fall of the Soviet Union, he went back and looked at all of the horoscope predictions from the beginning of like 1985 or something like that, and not a single fortune teller, crystal ball reader, whatever, predicted the fall of the Soviet Union. Not one. Now you think that would be a pretty big historical event to if you could predict the future, it would. So I tell people, don't get into the business of predicting the future. I haven't got a clue what's going to happen here. I just don't know. And I'm not paid to predict the future. What you're paid to do is try and see like this kind of pattern. And if you happen to see something that, wow, gee whiz, I got all these W's. And if I do map this out and take this trade, how often do we actually see the market ratchet up to these levels? And if this produces a trade where if I'm right, I get paid $3, but if I'm wrong, I lose $1, right? You see 3.1 risk reward ratio. Well, let's put it right around there. I'm just eyeballing this. This should come out to 3-1 if I've done it right. There we go, right? So if I identify a situation where if this even happens 50% of the time, that's just a flip of a coin. I don't know what's going to happen. It's like literally either scenario could play out, totally even odds. But if I'm right, do I get paid more than if I'm wrong? And that's what you have to learn about trading. Most people don't get it. Most people never get this message. And it drives me crazy. And it just reminds me, because the guys in the pits, they all told me I was nuts going off on this save the world bent. And I can see, to all intents and purposes, I mean, it's great for the people at TRI that got the message, and I constantly put out their messages that they're like, wow, Brian, now that I've learned this, I look at the whole world, I look at everything that's happening completely differently. I don't look at the world the way that all those other idiots do. And now I can't even talk to people about investing because they all act the way that I used to think of the world, the way the world acted. But actually, it turns out that the world doesn't work that way. That's why people buy Bitcoin at $50,000 and go, well, no, this time it's different. And they get wiped out. Anyway. So point of the matter here is I could very easily see a setup like this work. Could very easily see it work. Is there a guarantee it's going to work? Absolutely not. And this is what you have to learn as a trader. If I am right, I get paid $3. If I'm wrong, I lose $1. That's just the trader's life. So anyway, encouraging to see these bottoms coming in here, and interesting that the algo, and if you're going to trade algos, this is actually where a lot of people get derailed trading algos. Is they'll have this signal come in, and it's a buy. Okay, fine, it's a buy. Market does basically nothing. It flashes a sell, and you have to walk away basically at scratch. and then quickly turns around and flashes a buy again. And you have to have the tenacity to get right back in the trade. And that's why most people can't trade algo wise, and why the computer would just simply buy it, sell it, buy it, sell it. Nah, I don't care, just do it. And actually, what's super cool about TRI is that we have, now we're migrating to a different chat service because this chat service sucks horse, you know what? But we do have the automated system. And so in essence, all I do is I just wake up and I go, Jesus, the system told me I got to do something. So I do it. Where the hell is it? Anyway, it's in here somewhere. There we are, bread signals. So I woke up, got a big fat crypto long signal that came in last night. So I had no choice. I had to go in and buy it this morning. And that's exactly what I did. And everything, trading wise that I do on the site, I definitely try to post in Brian's big bot. If anything, what we need to do is we need to get a blog of sort of official TRI trades going. I don't know when the hell we'll get around to that. Obviously with the soft sort of market conditions, I don't want to be throwing a lot of money at development right now, considering that things are pretty quiet in this space. But maybe we'll get around to that. Right now, I am posting in Brian's big fat bot the trades that I'm doing. And I'm also, because I would like to see students try and use the site tools, we built trading journals and trading logs. So I'm trying very diligently to also do everything in my journal and my log. But you can see I even got a little bit slack about this because I've been doing a lot of day trading with Chris lately, and I just don't have time to put these journals and logs in because there are multiple trades in one day, and I'm not quite sure how to do that in a single blog post, but that's something I have to figure out. Anyway, so the point here is there are a number of ways that I am trying to report this on the site. It does need a bit more work, and it is a work in progress. But just for the record, I am back on the long side in crypto and just grinding it. And see S&P breadth rocking and rolling. So, and I'm not quite sure. Crypto Universe, last time we updated this, looks like it was the 3rd of January. So that does need updating. And I think it's just a question of we were using APIs and stuff to try and get the data, and Binance went and blew itself up. And actually, that's an interesting, I'd like to get a feel from the community. Do you think that Binance is about to implode? Because Crypto Chico, you listen to him, and he's basically saying that Binance is going to blow up any day. So I'd just be curious. Put in the comments, if you would, whether you think Binance, are Binance's days numbered? And if so, how many of them are there? Anyway. Okay, I am supposed to answer questions through this. It is 12:28. I usually like to take off for Liam around 1 o'clock or so. So we got about a half an hour or so to answer some questions. School is out right now, so I wouldn't expect there to be a lot of questions. And then also, if I don't get around to them, I'll come back a circle around tomorrow. If I understand correctly, I think I have a doctor's appointment tomorrow. I'm not quite positive though. So what's that? How to see the bread signals channel. Found it. Thanks. Okay, cool. Yeah, I absolutely love. Stuart's been working like a dog trying to get all this stuff automated. And really at some point down the road, I'm manually doing these trades on my own, but I actually would love us to get to the point where as this signal is generated, the bot just goes in and buys this position. And you can see I'm not doing a hell of a lot of money, and I wouldn't suggest anybody do a hell of a lot of money. We're trying to vet this thing out. We're trying to see whether we can actually officially post that we're actually making money from trading using this algo. So every single trade I do, I'm logging, journaling, diarizing. I've got spreadsheets, the whole damn thing. But what I'd love to see, if we could get to it, is that on that event, the algorithm just goes in and buys the position, or goes in and buys the short proxy or whatever the hell it is on its own. Well, we'll get there. For now, I'm just doing everything manually on my own. Yeah, what a pain in the butt, but I won't. Okay. So on to your questions. Let's see. Over on YouTube, let's just do a quick peruse there. Did we ever monetize this thing, Chris? Okay. All right, so I mean, I'll call a spade a spade. If you want my attention, you want full analysis. You guys know money talks, right? So might as well call a spade a spade. I was quite impressed. There's one gentleman on our Wednesday crypto shows who actually, I think he's out of Hong Kong, and he tips us weekly. And so I'm like, okay, well, whatever you want, sure, okay. I'm a whore, okay. So I mean, at the bottom, what I think the end message of Google is we're all going to turn into whores. Thanks, Google. Appreciate it. Anyway, so if you hear something that you like, hit the like button, subscribe, throw us a super chat. Of course, consider coming on, joining the site. Got a 30-day trial. You can sit and listen to daily briefs all you want. And kick the tires a little bit. I think if anything, we're reviewing what's free on the 30-day trial now, as some people would like us. Hey, look at that. Paul. Hey, there's Paul's giving us 50 Rons. Thank you, Paul. You're a sweetheart. Aren't you doing the Wednesday show? Oh my goodness, look at all these damn questions. What are you doing? Stop asking. Okay, I better get to work now. I gotta go quick here. Okay, so hey Brian, I never hear you speak of going back in time and hunting for setups that already happened. Is there a reason for this? No, hit the replay button. I always talk about that. In fact, actually, I did that. Remember, Chris, I did like an example on crude oil. I just like randomly just picked a day and then just hit the button and said, okay, let's see what happens.
Yeah, I think we did an exercise like that together on one of these Saturday meetings that we've had, where we just went through the replay button on a few markets and did some paper trading.
I do it. That would be something that would be cool to do on the after party show that we do Monday to Fridays. So whoever asks is Cooch. Just feel free. Just, on one of those shows, go, hey, Brian, pull up Philip Morris. Go to January 3rd, 1998. All right, and let's walk us through the trade. Let's see what happened. Yeah, it's fine by me. Let's say a guy wants to run a test on a particular setup to get the 2100. Do you think it's any value? Absolutely. I think I told you. There's this guy that I used to trade with over at Top Step, and he like literally prints out 5-minute charts while he was still trying to learn this stuff that he used to practice with a book on the bus, just a 5-minute chart. Well, okay, move the book one candle over. Okay, now what do I do? Move the candle one over. Now what do I do? Move the book one candle over. Now what do I do? And just so absolutely, I love you doing that. But if you are going to do that, I want 1,000 paper trades. And, the bottom line here, Cooch, is I guarantee you, if you get to the point where you have logged 50 paper trades, half of that 100 trade, you are going to know, and you are going to see, and you are going to understand the purpose and the benefit and the value out of doing this paper trading exercise, guaranteed. So it's not really like I'm revealing some sort of mystery of the universe. Every pro trader does this. Every trader does this. So it's just really a question of, if you're brand new to this, you just have to learn what pros do. And then once you sort of see how this works, then you'll be like, okay, I think I get this. Hey, you know what? Hey, I think there's a top coming in crude. I'm not confident enough, but I'll paper trade it. So boom. All right. I just sold crude. There's my stop. There's my take profit. Throw it in the trade ledge. Let's see what happens. Oh, boom. I just got stopped out. Well, geez, I guess I better learn not to do that. So just, I don't know how many paper trades you've done, but, just do, I'd say, like the article that I wrote for the public, you say you want to be a trader. Basically, I said, I want you to do 20 paper trades of any particular setup with no mistakes. And if you make a mistake, then you got to hit the reset button and go right back to the beginning. Because the key to this game is you have to strive for perfection. It's hard. It's not easy. This is a profession. I mean, just think of how many medical doctors. If you are a medical doctor, do you want to be sloppy? Do you want to leave your instruments inside the patient? Do you want to do a sloppy job of sewing them up so they're still bleeding as they're leaving the hospital room? No, right? You want to be perfect. When you're that guy arguing a case in front of a jury, do you want to have all of the facts about the case in front of you? Do you want to make articulate arguments that the jury understands and can follow your logic, right? You just want to be perfect. Well, in trading, there's no difference. I mean, that's what we're striving for. And most of the time, the reason why people fuck up at this is it's their mistakes that they make. Not that their setup is great or not great. I think on balance, I mean, hell, there's Paul there tipping us 50 Rons. And Paul, if anything, the reason why he's tipping us is because he's making us so much damn money from just trading our simple level 1 setups. He just doesn't make mistakes, or what mistakes he does make, he's sort of keeping them in check. And he's just, every time I talk to him, hey Paul, how you doing? Oh, just looking at charts. Just hunting setups. The guy's consistent. That's what it takes to win at this game. So I'm going to leave the question at that. If you want to talk more about that, what I would suggest you do is grab an asset just randomly and let's do an exercise. In fact, actually, Newmont, how I found that trade, I just picked up the chart and I was, I even tweeted it out and was kind of like, gee whiz, this is looking kind of interesting. And then I went through the whole process. I started at the highest time frame chart and I just worked my way down. I don't know where the hell it went. Here it is. I literally started at the highest time frame chart possible and just worked my way all the way down. Right. So I started at the monthly charts and did a historical comparison. Then I went to the weekly charts and said, okay, well, what's the price action? What's going on? Then I drilled down to the daily charts. All right, what's the levels? And then, like I even showed you, I took it all the way down to a 4-hour chart and I can actually see the trade. And I just did this randomly this morning because somebody in the lounge said, I'm kind of thinking gold stocks look kind of interesting here. And this is the end result of the analysis. Well, Newmont was awesome at 48 and change. Up here at 52, and we're a little bit expensive. So, interesting. So I do this all the time. This is our life, Cooch. All the time, every single day. Okay, number 2. Hello, Brian. Level 1 here. Grim used to whip out any chart and any time frame and draw fibs, and it seems to work. It would work using just level 1 materials, nothing more. Is he doing some magic? I can't seem to find any way to apply just my level 1 stuff on lower time frames. All I'm being told in the lounge is go to level 2 and 3 is level 1 only for higher time frames. Well, I mean, first and foremost, the cool thing is Grim and I have been working together now. I think he was actually in the level 1 program the very first term that David won the raffle. That's how long Grim and I. So Grim, he's got the better part of a full decade here now under his feet. So with that said, when you have that many miles under your tires, you're going to get very good at using these tools. Paul, over there on YouTube, who just gave us some Rons, is another example where he learned the level 1 program, but he sat there and worked like a son of a gun for a good couple years on his own, and he's got enough miles under his tires using those basic setups and concepts that he can see them in his sleep. Again, what I said there, I don't know who asked this question, but we walked through a crude oil trade and we took it all the way down to like a 1 minute chart. And what's so cool is what I want to show you is on Friday, if I'm not mistaken. Was it Friday or was it might have been Thursday? We had a 1 minute short setup come in, and it was a valid L Tangonator on the stock market right on the open on Friday, if I'm not mistaken. I think this was it here. Yeah. So so if we hit the Wayback Machine, was it? I think it was in here. And actually, if I'm not mistaken, well, I know for certain I actually took the trade. So how do you show that? So settings. Oh, that's interesting. It should show on here, shouldn't it? I'm gonna remember how to do this. Is this the micros? Oh, not weird. I don't know why it doesn't show on here. Maybe when you hit the replay button, it takes it off the screen. But yeah, you know, in the little trade notation things. Oh, am I not in there? Oh, yeah, you're right. Yeah, there you are. You're so smart. So this was a fun, yeah, there it is right there. I mean, it's such a cool trade. So this was, and Sharky even mentioned it, like he got up and Chris and I are like, okay, opening range trade. Screw you, you crazy all Tangonators. We're doing opening range trade. We're trading with Hogue and all that. But, you know, there's the bottom end of the range. There's the top end of the range. Here's Brian's favorite fib. This is a 3 minute chart. So there is 78.6 right there. You can see I think actually this was our opening range trade here. We rallied right up against these overnight highs. And so there's reload short zone. And then if you do another reload short zone, there was 78.6 right against that original top, right? We can go down to a 1 minute chart to see this. So there was Sharky sitting there going, all right. And if I'm not mistaken, all through this, here, let's put all these crazy squiggly lines away. Like that. So there was Chris and I. We took our opening range trade and got stopped out. Boo, hiss, hiss, boo. Sharky was sitting there going, well, you know, I trade this thing called the El Tangonator that some clown taught me in the level 1 program eons ago. And so there is the top. You can see, I mean, this is a beautiful trade. It's absolutely textbook. There is the bearish momentum divergence in MACD that I teach you. There is Willie, nice and stupidly overbought. So everything that I teach you guys is you want to work your open order. Remember, there's Brian's favorite fib, 78.6, right up against the original high. You could have said, well, you know what? I'm going to do kendo body highs for my trade location. And you would have actually gotten even a better fill than I got filled, right? So there's Brian, 69.5. So I got filled. It went up, it tagged that, and I got even a crappy fill here. And I had to sit there through this next minute and watch the market go all the way up. And if Brian says, well, gaps need filling, that's level 2 though. But candle body highs for trade location, there's the reload short zone. And look at this trade. When I saw this trade work, I was like, Sharky, you son of a bitch. I couldn't believe it. And, just like everything that we teach in the program, market comes down, puts in a W within a W, and I'm like, better get the hell out of there. And Merry frickin' Christmas. There's a nice big fat win for you. And you tell me, right? Can you teach yourself this? Now, this is like a 1 minute chart. This is crazy. Yeah, well, I used the 5-second chart for that opening range trade just to try and help me see price action. So point here is, right, if I had just thrown my order in, right, there's the open, there's your dump. Remember, we had bear divs all confirmed up here. And I worked my stop at, say, new highs. Remember, that was 78.6 of the whole range. And I ended up getting out here. Now, how many times, if I take this trade 10 times, how many times out of 10 does this have to work if I get a 7-to-1 risk reward ratio just for me to break even? Well, about 1.5. Let's say 2. So 20% win rate. But if you can hit that and risk against those highs, and keep in mind, market was racing straight up here. And then we're all like, oh shit, oh shit, oh shit. And then it melts down. I mean, there you go. Whoever asked this question, this stuff, that's exactly what we teach you, right? Exactly. Well, I don't need to say right. I know it. Bear div confirmed. Willie stupid. All right. Hunt reload short zone against the original market structure top. Risk to new highs. And, really you should take profits at 2-to-1. This one, I took some profits and then I wanted to try and stay in the trade as long as possible. But when I saw everything start to turn back up here, I was like, you know what? Let's just get the hell out of here. So, yeah. So yeah, they ran it up right into the noob stop, but they couldn't take out the original highs. And that happens a lot in this business. So I'll throw this in here, but I hope that is a good demonstration to you that this stuff happens all the time. And what I would suggest to do is pop into the daily briefs and just ask. Now, why do I suggest that you continue on the level 2? There builds confidence in your trading when you get confluence. So, as I mentioned there just a moment ago, you could have also said at that exact same moment, well, I'm more than happy to come in and sell this gap. Would that have given you a better fill level than my 78.6 fib tag? Yeah. We learned this in the level 2 program. With that confluence of information, yet another trade level, would it help you? Would it help you make that decision to step in and sell that level a little easier? I think so. How about things like volume profile? So if I showed you this profile and you see that, well, given this whole range, I know that Mr. Hoagland often tells us that we like to short above value. And if we actually get a move below value and then above value, you might actually find, if we accept back into value, that we should revisit the bottom of value. So a retest of these levels, is that realistic? Yeah, that again is more sort of that level 2 conversation. Volume profile, trading with gaps, those are 2 level 2 program concepts. It's not really like there, and maybe also too, you're a big fan of trend lines. So we see a nice juicy trend line and you say, all right, I like trading trend lines, and I'm going to let the market trade back to the trend line. If I get any sign of failure on the other side of this trend line, I am so going short, right? Maybe you have to drill down to like a 60-second chart, or well, that would be 1 minute, right? Maybe like a, like we said, 10-second chart. Well, here we are, 15-second chart. Do we get a nice little M on the other side of that trend line to help you short? I don't know, maybe. That was right in here, right? So this is trading with trend lines. Interesting. Look at this battle. So we broke through here. Now, if you took our trend line module, you would know that that's not really a very good buy signal. We want to see a W on the other side of this trend line. So I don't know whether this would actually help you get into a trade or not, but it might help you understand the context of this price action. And maybe what you would have said was, Brian, I'm going to take a shot shorting against the highs. I love this 1 high, 2 high, 3 high, 4 high, 5 highs to work with. Okay, cool. So if I'm going to take my short shot up here, then if I do actually see a W come in here, I'm just going to cover the short and just get the hell out. And the W never came in. So you were kind of like, all right, I'm good to go. And actually, there's your sell signal right there. And even though that's below the 61.8, I wouldn't like to short that. That's actually your trend line setup sell signal. So the point being that this is another level 2 concept that we talk about. Another level 2 concept, again, thinking confluence. And you saw Josh talk about the noob stop there in the YouTube chat room there. We call this horizontal support and resistance. And what we're really looking for here is we are looking for confluence of levels. Is there a level that the pros have come in and repeatedly stopped the market? And would they likely stop the market again if it came into that level? And so you can see this is what we call a cluster of horizontal support and resistance. And it makes sense. Obviously, in hindsight, it makes perfect sense why this thing rallied up into this levels, just hit a brick wall and just collapsed. So again, there's another level 2 concept. So it's not really like there's even a hard cutoff of what level 1 and level 2 and level 3 is. It's a candy store and it's huge. And there's no way in hell I can possibly teach all of the candy store concepts in just a 12-week program. It's impossible. So I had to make a mental decision. Where do we stop the level 1 and where do we start the level 2? Which is just all right, welcome back to class. Open up your textbooks. We left off in chapter 5 last term. It's now chapter 6. On we go. And it's not really like, that's the end. And that's the one thing that I criticize some people who just take the level 1. It's sort of like, okay, yeah, you're right. Those concepts work. And if you want to just leave it at that, your education at that, okay. But there are other people who are kind of like, well, I want to know more reasons. I often tell people if you can find 3 reasons for a trade, odds are you can find 4, 5, 6, and 7. But you can't define 4, 5, 6, and 7 if you don't know what 4, 5, 6, and 7 are. So here's a good example where, we use the level 1 concept for trade location, reload zone. We use momentum divergence, level 1 concept to help us understand that price wasn't really nearly as strong as what price was leading you to believe. But you can clearly see volume profile will above value. That would be a reason to consider shorting. We're up against previous highs, horizontal support and resistance. That would be a reason to consider shorting. We come into a price gap on like the 1-minute chart. That would be a reason to justify shorting. But none of that stuff is taught in the level 1 program. So it's not really like one is righter than the other. It's just, like the way that I would look at this is, I'm here teaching you what all these darn things, what the names are, what you use each thing for. So if you're sitting at the table, you don't look like a doofus drinking your beer out of a sherry glass or something. So if you sat down with one fork, one plate, one knife, one spoon, and one glass, can you eat dinner? Of course you can. There's no reason why you can't eat dinner. What I suggest to people, and the sort of the logic behind my education here is, I want you to have a basis for what these tools mean. You know, like when I go on YouTube, it's incredible to listen to people. They still make this mistake where they go, oh yeah, some guy says I need 3 reasons for a trade, so I'm going to get a signal from RSI, stochastic, and MACD. And those are going to be my 3 reasons for trading. And that is setting yourself up for failure, because that's really using 3 different forks and not having a knife, not having a spoon, and you're trying to drink your beverage using a fork. How the fuck does that work? Or you've got a water glass and you're trying to eat your steak. You got your steak in the water glass, and it's kind of like, I don't know. I don't think that's going to work. Wait, so try to understand that because the candy store is so big, I want to give you multiple trade location reasons. Yeah, fibs work awesome, but there's also volume profile levels. There's moving. Hell, we haven't even talked about moving averages. Moving averages are hugely popular in technical analysis, but that's a level 2 program. I just don't have enough time in the level 1 to give you the answers to moving averages. So maybe use moving average, maybe use trend line, maybe use horizontal support and resistance, maybe use gap theory, maybe use WD GAN. The point is that I'm trying to educate you. Now, if you're kind of like, Brian, I don't want to be educated. I like this nice, simple setup that you taught us in level 1, and I'm just going to use it to go make money from trading. And that's all I need. That's all I care about. Okay. But just understand that my motivation with teaching you is I want to show you the entire table setting. And I want you to be able to have a conversation from a position of strength, not a position of weakness. And I hear a lot of these social media influencers, they don't even really know what they're talking about. They're just sort of talking out their asses. Oh, well, it is what it is. I mean, I'm not going to fault them. They're just trying their best. So I hope that helps answer that question. Let me know, whoever asked this question, whether it did. We can always look at it again tomorrow. Okay, as we all know, I got to wind this up here in a couple minutes. I think what we ought to do is, I do remember when I started this conversation, there was only a couple questions in here. So I think what I'm going to do is I'm going to answer these questions tomorrow, but I also might have a doctor's appointment, which means we might have to do the daily brief a little bit late tomorrow. So I unfortunately, we're just running out of time, so I can't get to all these questions. Like I said, I'll try and do this either tomorrow, and especially with Nicholas, who wants me to actually look at some charts. So we'll do this in the after party show either tomorrow or Tuesday. Now, to wind up today's show, let's see if we can go and actually change somebody's life for the better. Quite a few of you put your names down, so that's kind of cool. We've gone and just gotten everybody's first name. And then also, if we have some duplicates, seem to have quite a few Ivans in the world. We also have their, second name to try and keep them sort of sorted. So probably work off of that. What I think what we need to do here is, if you do hear that your name is called, awesome. You have to reach out to us and let us know that you were the winner. If it was you and you're called, I think last term, the winner never did show up. So I want to change your life, but if you don't show up, there's not much I can do to help you. Once this is done, then we will go into our regular sort of pre-term. I don't think it's necessarily a marketing plan, but we do have one gentleman on the site who sends out emails and sort of talks a little bit about what we covered in the daily briefs and sort of the value of the proposition. So, you might get that email. Just be forewarned. But the point of today here is, can we change somebody's life for the better for free? Now, I will say, just as that person said, and just as you see Paul here, if you want to just learn the level 1 program material, trying to learn to run a small business of trading with the expectation of turning a profit, then the level 1 program is perfect for that. And the fact that we charge you about $1,000 or so, I think the prices are going up, but I leave that to the marketing department. The price of this course could be $5,000. If you actually learn this material and you put it to good use, it is priceless. $5,000 would be giving it away. So it's really just a question of, do you want to change your life? This is exactly how to do it. But, as Ross Perot used to say, I can lead a horse to water, but I can't make it eat peanut butter. If you don't want to eat that peanut butter, there's not a damn thing I can do about it. Paul here is living testament. He had a career that I don't think he was overly happy with prior to knowing us. I think now he has a career for the rest of his life. Paul could very easily be a George Soros 10, 20, 30 years from now. Easily. He gets it. But I can't force it down your throat, right? I just can't. It's impossible. But I'll tell you, if you want to change your life, it's right here for you, folks. Where's the camera, right? I'm talking to you. Actually, Jojo, this is what she wanted me to do. She wants me to help change your life, to empower you. Do you want it? It's right here. So, are we ready to spin this wheel, Chris? Oh, maybe
I think it's time.
Chris?
Can you hear me?
Can I get a drum roll for Chris?
I hit the button wrong. Sorry about that.
Oh, there he is. Oh, there's the drum roll. All right, yeah, let me hear a big drum roll. Actually, I think this does a drum roll too. Anyway, here we go. We're going to change somebody's life. And the winner of the 2023 Q1 Level 1 Education Program School Program is William.
Woo!
Way to go, William. Now, who the hell's William? That's a pretty nondescript name. If your name happens to be William, I used to have people that would show up, I'd go, all right, there's a tutorial session for William. I'm here waiting for you. And like 20 different people would go, I'm William, I'm here for my tutorial. So, congratulations, William. We probably take a screenshot of that just for posterity. All right, so William, way to go. We'll post that in the lounge just so we have a record of it. There it is. Get in touch with us. I'm sure we've got an email contact for you. Chris is probably already on that now.
Yep.
If you happen to see this and you're watching later on, congratulations, way to go. Hit the like button, subscribe, or ring Brian's bells, and PMA for the win. We'll say congrats to William. Oh, what the fuck is a William? Anyway, So, way to go, William. We'll say our Q1 23 TRI School for Trader Development Raffle winner. Woo! DMA for the win. I might as well put the website in there too. Isn't that weird? Because you used to spin this in the past and it would do a whole bunch of sounds and the whole damn thing. So I wonder if they got rid of that anyway. And then we might as well put learn. Might as well. What the hell? Oh, actually, well, or I think there's another one, right? Join. Join. How does that go? All right. So anyway, there's a couple references for you. So way to go, William. Awesome. There we go. Now get to work. That's probably a better one. All right. So we will see and hopefully hear from William soon. Let us know. And of course, maybe Josh and stuff can tweet that out. So, okay, 107. I should probably hit the road. Congratulations to William. I hope you guys got some value out of this broadcast. Thank you for the coffee there, Ron. Appreciate it. Or Paul. Thank you for the Rons. Was there anything that I forgot to mention, Chris? Yeah. All right. So if you did ask a question, tune in tomorrow or Tuesday. Like I said, I might have a doctor's appointment. I can't remember how the hell that goes. It's a really weird here in Canada. It's a nightmare if you're sick. So we'll do some follow-up. Did see somebody over there ask about Ubic. I'm no longer in that story. I sold everything when Trex did their idiot, stupid move there. So not really even paying attention to any of that stuff. And frankly speaking, I don't mean to be rude, but you know, the crypto market did its thing into the fear cycle apex. It did exactly what it was supposed to do. I used it as actually a really, really good learning experience. Made some good money. I certainly can't complain. I could sit here and do nothing for the next 5 years and have my income met and not be worried one bit. I mean, I don't like it and I don't want that to happen. And we're growing a business here and I'm trying to get this this dream that I had about building a physical campus up and running. But, you know, that's for down the road. But with regard to sort of what we did last cycle in crypto, I'm pretty much done with the space. And frankly speaking, you know, let's call a spade a spade. A lot of people in this crypto space are this gentleman here. You know, if I was going to write a book about the crypto space, I think there's actually more people on the development side that are like this gentleman than actually not like this gentleman. And the sad part about it is all these crypto people all fell into the same traps. When I recommended people to take profits on the way up and pay themselves, you know, the crypto experts laughed and criticized a guy like me. And when I told people, Sedona Euphoria, you're idiots for expecting this stuff to go higher, don't buy. And people laughed at me and said, no, this time it's different. You know, I don't really have a lot of empathy for people that got wiped out in this space because I actually had one guy who actually came on the site and said specifically, Brian, I'm going to ignore your risk management rules on Luna because I am smarter than you. And look what happened. So look at that CLAS. I mean, the saddest part about speculating in the marketplace is you always have to look at every single thing you buy from a risk first approach. And the saddest thing that I see with crypto is that people actually believed half of the bullshit that they were told by these people, which really disappointed me. Treated this as a game. I came out the other side. I won. If you know what the rules of the game are, you follow the rules. You don't get greedy. You pay yourself when the market gives you the opportunity. You understand you will never be right 100% of the time. There will be the CLASs and the UBICs of the world. It's just a game of speculation. That's all it is. Leave it at that. Well, actually, you do okay in this world. And like I said, I ain't got nothing to complain about. I came out very, very well. And more important, I did exactly what Jojo asked me to do. So I feel as though I let spirit guide me. I think I helped a lot of people in this space. I was rewarded. Like I said, I don't really have any financial concerns on my own person. I've paid a shitload in taxes. So I've done everything that I'm supposed to do. But at the same time, too, I understand that this was venture capital. And I hate to say it, folks, I would actually prefer to be invested in the equity side of this equation going forward. And I wouldn't be surprised if a lot of these cryptocurrencies actually are forcibly put out of business by Big Brother because of people like this. So it's sad. And sadly, what happened with Trex actually was a pretty good commentary. That's almost like bulletin board tactics. And when I was a retail stockbroker, we used to try and encourage people to stay away from the bulletin board. And I hate to say, a lot of the shit coins and altcoins, it's very bulletin boardy. It's the exact same thing. And the characters that are involved in this space, they act exact. In fact, if I'm not mistaken, I can't say for certain, but I know this guy was wrapped up in all the shenanigans about sort of shady poker sites. But if I'm not mistaken, I think this guy was also involved in the bulletin board, pink sheets kind of speculative part of the stock market in years gone by. And you have to understand that if you play in, assets like UBIC and stuff like that, you don't know. There might be, wherever our buddy is here, he's somewhere down in all this. There might be, in fact, actually, all of these, whether it be Bickinick, or whether it be Roly Polioli, or whether it be Sam Bankman-Fried, there's always these characters. And more importantly, you don't often hear about these guys, but there's usually, these are the guys that actually want to steal your money. And I wouldn't be surprised, like I said, if that SBF guy was just a pigeon for guys like this who knew all along exactly what he was doing. So that's actually a very, I can't comment on UBIC itself. I don't really know the fundamentals there. I do know there was a gentleman that I used to do crypto shows. But what was interesting about that gentleman is he never really did talk about UBIC at all, or the sort of, what development is actually going on. I did at one point hear that he was doing, smart contracts and all that kind of fun stuff. So, caveat emptor, you want to get involved in that space, you got to understand what you're getting involved in. None of these people, none of the bulletin board people, none of them have any legal obligation to tell you the truth. So you better understand exactly what you're getting involved with. If you're going to buy something, make damn sure to sell half on a double, get your original money back, and understand, just like the CLASs, there are going to be stories that just go belly up. And so you got to actually build a plan to prepare for that. I don't know whether UBIC is going to go belly up or not. But from what I understand, it's just basically gone straight down over since that 17-18 peak. Maybe it's starting to bottom. I don't know. I'll leave it for somebody else. I got plenty of other things to chew on. Okay, why don't we leave it at that? PMA for the win. Congratulations, William. Way to go. All the best. Chris, if you could take us on out of here, I'd love it. The only thing left for Brad to say is, wish me and Liam luck on the road. I love it when you guys do that. And the only thing left to say is bye for now. Hit the like button, subscribe, ring my bell too.